How we doing? How's everybody? So Thursday mornings I always get back from the gym at like 10 to, well, about now, basically. So I'm a hot, sweaty mess. Always good to see on camera in the morning, isn't it? Don't want to put you off. Morning, Stevie. Morning, David. Morning, Steve. Morning, Johannes. Morning, Dwee. Morning, Figinia. David. Morning, George from Sydney. Good afternoon. Good morning. Good evening. All of that. How's everybody doing? We've got a gap up on the DAX again today. So just move over to the charts, might be handy, mightn't it? So yeah, gap up on the DAX. We've got the gap from yesterday, which isn't filled as well. So we've got a double gap down situation today. So good chance we might get a bit of a drop. Where's my pen this morning? Over there. So we've got that gap down there from yesterday. We've got that gap down there from today. So that is ADR today. So that's going to be quite a big drop to try and get back down there. So we'll see if we can make it down there. Morning, LA. A face to the voice. You haven't been here for a few days then. I've been a face to the voice since Friday. There you go. You have to go back and watch all the replays. By the time you've watched all the replays, it'll be next Friday. What's your thoughts on the best bricks? What's your thoughts on the best bricks that's starting to avoid the US dollar? Confused.com. Morning, Celiso. Sorry, I'm one of those people that can't stop sweating, basically. I've been doing high intensity for 45 minutes, and it takes my body about 45 minutes to actually bring itself back down again. What's your thought on the bricks starting to avoid the US dollar? I don't know what that means. I'm trying to figure out what word bricks might mean, Johannes, and I can't. So I don't know what that is. Call me a madman. I'm setting up a funded account, VPS, right now with the 1 hour hedging set file. One question about that. What's the best way to avoid the rollover, slippage, or spreads? Morning, Johannes. Morning, John, rather. Danny. Place a suitable trading hours or a max spread. I would probably use, it doesn't really matter, to be honest, but I would probably use trading hours. Because the max spread is a finite. I would not want to take a trade when it's like that. Yeah. But if I got a reversal at 1 a.m., for example, and the spread was like that, and it's normally like that, then I would probably take that. So I would probably go max hours. So so if you set it to 6 minutes to the open, if you set your time of day filter to something like 01 to 23, sorry, 1 rather, not 01. Yeah, 1 to 23. That misses, well, actually, you need to check your broker. Check what time the first candle is on the 5-minute chart on your broker. Yeah, that's what you need to check. And set it to the hour after, whatever that is. So on mine, for example, that first hourly candle, I can't see because I've got the thing here. So that candle there is 0. Yeah, so this candle is 0, the midnight candle. So I would say from 1 onwards. You're missing then that first 60 minutes where you're getting all the massive movement. And then this candle here is 23. So I would say maybe 22 and miss the last hour of the day. Last hour of the day, first hour of the day. BRICS is Russian, Indian, South African, and China. Is it? I don't know. I've never heard that term before. So what was the question? What's your thought on the BRICS? I've no idea. I don't know what that is. I can't give you an opinion on that because I have no idea what it means or what it is. So don't know. the finance world is very fickle. If you look at the bias, look at the key fundamentals. The US dollar's interest rate is 5. Yeah, they don't care. You're going to get more bang for your buck in the US dollar than you will everywhere else. US dollar's going to benefit from that. So I don't think it'll make a massive difference. It will do if tensions start to rise, and if tensions start to rise, we tend to go into a more of a fear to stroke extreme fear scenario. When we go to extreme fear, obviously money piles into the yen. So, but it does also go into the US dollar as well. Right. This thing. Oh, this pound CAD is doing my head in. Morning, Joaquin. The B in BRICS is Brazil, is it? Okay. Morning, Anna. They are moving their trade from US dollar to yuan. Oh, are they? Okay. Don't know. It'll affect the US economy, but it won't affect money going into the US dollar from a financial perspective because the interest rates are better than everybody else's. Interest rates drive the market. Yeah. If I have $10 million, 10 million of my currency, and I need to invest it where it's going to get the best overnight rate, I need to put it in the New Zealand dollar, the US dollar, or the Canadian dollar at the moment. Yeah. A war will probably affect that. I've no idea how, but when I know, I will then pull my money back out again. Long term, that is. Morning, June. Morning, Altro. Everybody give us a thumbs up. Let's get those thumbs up going. Right. So, pound CAD. God, it's pushing up really hard. Sweet Canadian dollar. What do I do with this? So I've got an aggressive drawdown control position running on the pound CAD. I've got an exit at break even. This line here is my break even exit. It's missed my TP by that much twice, and now it's rallying away from the Asian lows. So what I'm going to do is I'm going to make an executive decision. I'm closing my aggressive drawdown control position out, and I'm going to do some drawdown control down here. So I have just closed out $497. So looking at my pound CAD positions, I'm going to take a third off of that 0.22 at the bottom, which is, let's say I'll take off 0.8, 16, something like that. So I'm going to close the 0.8 off of that. Off the 0.38, leave that as it is. Off the 0.5 there, which is 300, I'm going to take off 0.1. Okay. So that's aggressive drawdown control. That's what it's used for. So I've used the profit from this aggressive drawdown control position. Yeah. Oh, sorry, did I take some profit off that one? Or did I just do that? Yeah, so I've reduced the size of that, and I've reduced the size of, no, sorry, I've just taken 0.1 off of that. The 0.29 is the one I wanted to take it off. I took it off the wrong instrument then, didn't I? Idiot. These were, it's on my other machine. They were in the wrong order. I was looking at it this morning thinking, what am I going to do with it? So that 367, I've just affected that 0.14. So that one there, that 0.29, I'm going to take a 0.1 off of that. There we go. So basically, I have just banked 500, 580, and I've done drawdown control at 185 and 127. So I've banked a profit, I've reduced my exposure on the position. You can't see it actually in that corner I was drawing, but anyway, you know what. And now my pound CAD is sitting at 0.39 in drawdown with a lot less exposure on it. And it's really easy to get to the exit on that pound CAD. Look, so all I need is that much movement down. And we're expecting it to come down into there. So the average is still well within an ADR. Yeah, good target to the downside there. So I'm also hedged on this now because we've had an RSI extension to the downside. So I'm long and short, which is handy. I don't care which way it goes. I make money. Right, DAX. We are open. There's your pre-market 15 opening range. What the hell is that? There's a gap. Did anybody get triggered on the short pre-market? I don't know. I'm not running the pre-market. I don't know if that would have triggered you short. I don't know what that is. You would have been triggered short on it if it got placed as a limit. So I don't know what that is there. That's a weird candle. Don't know what that is this morning. Odd. Anyway, morning, David. Question in regards to drawdown control, specifically for funded accounts with a daily drawdown. You mentioned the aggressive approach. Could a hedged trade at a certain level also assist in controlling drawdown? Yeah, obviously a hedge will. If you're one contract long and you go one contract short, you freeze your P&L at whatever that figure is. Yeah. So if you hedge yourself 100%, your P&L will never move. So if you get yourself to like 3.5% in drawdown and you've got a news event coming up, if you wanted to, you could hedge it so that nothing can affect you. However, you've got to manage that hedge. The reason I don't hedge is I get myself tied up into knots with hedging. I'm just no good at it. I've tried many times. I'm not a good hedger. That's why I don't do it. I prefer aggressive drawdown control position because I'm better at picking entries after big moves than I am at hedging and figuring out where the hell that move's going to finish, which is what you have to do as a hedger. It's hard. Some people are really good at it. I'm just not. Morning, Mumo. Quick snippet on how to pick the pairs to run the market reverse alerts EA on. I'll do that in a sec. Outro. Yeah, you got in that pre-market, did you? So yeah, that's a weird thing. What's going on? Let's have a quick look at the US indices and just see what they did this morning. We'll have a look at the news. Oh, look, the US indices gapped as well. Look. We gapped up. Something happened at the open there. Something. Got a small gap on the Dow. Small gap on the S&P. Something happened at the open there. Don't know what that was. We had the CPI figures come out for Spain at 8 o'clock. That's because we didn't look at the news this morning, wasn't it? Oh, there you go. Right, so the CPI, that's what happened. Oh no, that's not the German, that was the Spanish, not the German. So we got the German CPI figures today at some point. I don't know why that's an all-day event. Normally there's a time limit on this, but for some reason today they haven't decided to give us a time. So we've got Euro zone, we've got the German CPI month on month. It's the preliminaries. So hit and miss. Has to be out by quite a lot to make an impact. But Germany and France are the biggest inflation contributors to the Eurozone. So they are the biggest impact. We've got the GDP figures for the US dollar at 1:30 this afternoon, which is an hour before the market open. So that won't affect the open, but it will affect the US dollar. We've also got the Swiss Governor Makler, I never say his name, talking later. And we've got Yellen speaking this evening as well. So those are bits and pieces to look at today. This is going to be a tricky one because we don't know when this is being released. So weird. I don't know why they don't put a time on it. They normally do. I'm sure they normally have a time on this. Listed, oh, here you go. Listed as an all-day event because the actual is comprised of data from 6 German states which report their CPI throughout the day. Okay, right. There are two versions released about 15 days apart, preliminary and final. So it's the final I'm thinking of that has a time on it. The preliminaries are just an indication. So we might have a bit of volatility coming through constantly today on the euro. So keep an eye on that. It's a 15-minute opening range, which is broken long already. That's a big candle as well. This is a real messy thing this morning, isn't it? A real messy thing. Let's have a quick look at levels on the DAX before I look at the overnight news. So we got this level coming up here. So that is the high of the previous week. That is the high of last week. So that is a previous, really good previous support resistance look. Let me just turn myself off for a minute. Yeah, we got a this area here in the corner is respected multiple times over and over again. Yeah, we've got multiple respects on this level. Almost touched it there, banged into it, banged into it, banged into it. So there's a really strong resistance level, 154.80 to watch out for. We have also got this propulsion gap to the upside this morning, and then we have ADR today, which just happens to coincide with the monthly high for March. So basically coming back to pretty much where we started in March. This is where we started in March here, and this is where we are now. So in March, all we've done is push down and push back up. We've gone basically back to square one. Yeah. So bit of a funny month for the DAX March. But if you look at this from a candlestick perspective, what the candlestick actually looks like right now for the month is that. So you've got a massive monthly bullish hammer. Yeah. But hammers in an uptrend have no relevance. Hammers in a downtrend have high relevance because they are the exhaustion point, and shooting stars in an uptrend have relevance. But hammers and shooting stars in the middle of a move mean nothing. Look at this. Beautiful big hammer. What happened? Bang. Doesn't make any difference whatsoever that it's facts it's a hammer. Just means that there hasn't been enough selling to reverse a move this month. So we got a target to the upside today to aim for potentially on the DAX. We've got a resistance coming up, and then next resistance basically is ADR. So if we crack this morning, we've potentially got a trend day run up to the highs. If not, and my preferred option today would be these double gap fills. We're on Thursday. I think we should at least start to make a move down to get these gaps done. We are extended on the hourly on RSI to the upside. Yeah, so it would make sense that we are going to start to roll over for our gap fill. It's just exactly the same as here, look. Yeah, push up, come back down, fill. Push up, fill. Right. So that's the news that's forecast. Overnight news, I haven't had a chance to look at it because I literally got back from the gym, drank my breakfast, and have sat down. So FDIC contemplates squeezing biggest banks as it plugs 23 billion hole. Good for the banking sector. Banks may face a macroeconomic situation with policy rates in its effective low band. Nothing. So there's nothing exciting news-wise to look at that we need to pay attention to. Good. So we can do analysis on everything else. Let's just watch what DAX is doing on this 5-minute opening range. Morning, Daniel. Morning, Clips. US dollar CAD. Have a look at that in a sec. Morning, Jonathan. Morning, Mr. Chris. EU looks like a big move down from here. Have a look at that as well. We've got no ADRs again. Why is that over there? Why are all my dashboards in funny places this morning? Yeah, so no ADRs to look at. We've got some weeklies here. All the weeklies are yens, basically, apart from US dollar CAD. And we got a few, look, 4 hours. We got some 4-hour RSIs, finally. So we'll have a look at those as well in a second. Okay, so DAX is going to try and go long by the looks of things. So we've got two very, very good levels coming up here, yeah? So this one here for a potential reaction. If we do break this, we've got clear sky, basically, as you can see, for a while. So there's literally, I suppose there is a level there, potentially, to look out for. Yeah, so we got this level here. Can't quite see it, but I'll tell you what I'll do. Yeah, so you've got this level here, which is that. Sorry, that's not the wrong, is that the right one? Yeah, sorry, that, yeah, so there. Apart from that, if we break this level, which we are just doing, I can't see any reason not to go to ADR potentially today or up around that region. So that does the gap fill. So once that's completed, there is no other reason to go higher. We'll find limit order triggers triggering up the highs, which will drive price back down into this gap fill. So that would be a beautiful swing short for an ADR move to the downside if we got up to there today. But you could start to scale in at that level, or at the gap. You could take a second and then try and play that gap fill from there. Really nice trade. But we'll wait and see what happens. So the opening range breakout on the M5 is off to the upside. Okay. Right, so there's no ADRs to look at. Weeklies are all yens. We looked at these yesterday. CAD yen extended to the upside. I'll look at the trades that I got out of yesterday in a minute. Banks 0.5% yesterday, 0.5% bank this morning. So we'll look at those in a minute. CAD yen, hourly RSI extension. So there is your low of the week. That is your high of the week, which is the weekly extension, obviously. Targets to the downside galore. Yeah, so I'm already in a sell. I've got 2 positions on. Second position taken this morning for that drop. Euro yen. I've got 1 sell on that at the moment. Didn't take a second. Wasn't far enough away. Looking for this gap fill, potentially down to there as well. Pound yen, again, weekly extension. I'm in 1 short on that. And the weeklies from there all the way up to there, taken out that high, failed, push back down into that propulsion gap there, potentially coming back down to fill that one as well. And then US dollar CAD, someone wanted to look at that, didn't they? Clips. So I've got 2 longs on this. I've just taken 1 this morning. We've just had a reversal alert this morning. There you go. There. That's the reversal alert. So we pushed down this morning. We are pushing down again, so this may well get invalidated. But so if it does, that's fine. Got a nice big propulsion gap up there to aim for. And on the hourly, that's your target initially. Got a little one there. Might come up and fill that, but Canadian dollar at the moment seems, well, this looks like US dollar weakness at the moment, to be honest. It's not CAD strength, is it? No. CAD's weak. I was just going to say, the CAD's weak. God, that shows you how weak the US dollar is this morning. Look at that. The Canadian dollar is weak today. Everything is pushing against the CAD this morning, and the US dollar CAD is coming down. So that shows you how weak this US dollar is at the open this morning. So see if that changes. But so yeah, so US dollar CAD, very nice extension on the hourly here. So that was my first entry. Yeah, and basically I've just done a drawdown control on that, as you can see. We pushed up, didn't get any kind of pullback into that gap, and we pushed straight back down again. So second entry has just been taken this morning on that. Average is there. So just looking for a push back up into there, exit the position. Support wise on this one, we're extended again on the hourly, obviously. We're coming down here. Look. So ADR hit potentially today on the cards. We'll see what happens. Obviously, we've got news today. So US dollar is going to move on GDP this afternoon. GDP is a key fundamental leading indicator. It's one of the scorecarding indicators. So we'll see what happens. We had negative GDP last time on the quarter. So we'll see what happens there. But yeah, it's a target to the downside at ADR on that. Extended on the hourly. Right, so we'll have a look at the RSIs in a second. Euro US dollar, morning Kennelly. Euro US dollar. Sitting in the middle of nowhere at the moment. Looks like a big move down from here. Don't know. We'll find out. It will move on GDP this afternoon. We've got a target to aim for down there at 175, 200 ADR. We've also got an upside target off of that accumulation break from Thursday last week. That one's done. So potentially up to there, then down to there, potentially up to there. Let's have a look at the retail crowd, see which way they're going. That's the fundamentals. That doesn't look like retail. Euro US dollar, they are short. So I would prefer today actually along up into there. Take that liquidity, potentially come out and take that at 125 ADR. So we could spike up on the news. If we do, that would be a lovely short from there. Obviously, if we get negative news, US, we'll get a spike on the Euro US. I think US dollar CAD is going to weekly support. Forex ADR signals. Interesting. Selling signals off the back of my work, are you? Are you? You think it's going to weekly support? Okay. If you say so. Hang on a minute. Let me ask. Got a 50-50 shot being right. Pound odd. I'm only joking, Forex ADR signals. I didn't invent ADR, do what you like with it. Pound odd. Pound odd's in the middle of nowhere at the moment. Just in the middle of nowhere. Partial gap target to the downside, which is kind of very deeply tested. So, don't know. There's literally, it could go any way with that at the moment. You're sitting in the middle of a 4-day range, look. Well, you're sitting at the bottom of a 3-day range, in which case then it would be a good long opportunity. But it's not extended enough for me. It's just been going sideways. So something going sideways for me, it's not really got any appeal. It is the pound, so I would expect it to drop, but you're going to need a strong Australian dollar, which we haven't got at the moment. So if you look at the scorecard on it, it is -1 at the moment. Retail is saying to go long. They are all short, so we want to be going long on it at the minute. But there's no fundamental advantage either way. It's more of a sell than a buy. However, at the moment, the retail crowd are shorting it. So they've been enticed into shorts there, which means liquidity is sitting there. They got enticed into shorts off the double top yesterday, which means liquidity is sitting there. There, could go either way. Either way. Difficult one, that one. Morning, Freeman. Morning, Ignatius. Nkwane. What do you think of Euro odd? Getting close to a buy. I'm in it short though. So I'll be getting out down here when it gets there. But it's in a what? Class that as day one. 1, 2, 3, 4, 5, 6 day range at the lows. So when this breaks, it's going to come down fast, straight back down to here. 200 ADR to the downside. Not obviously in one day necessarily, but yeah. So I'm short on it at the minute. I'm waiting for it to come down. I got short on this extension there. So there or there, but I mean that's all I need to get out of the position. If it gets down to there, brilliant. But we've also got these areas down here as well, old ones to aim for. So there's plenty of downside on it. Right, let's have a quick look at yesterday. So what did I bank yesterday? 28th. No, 29th. 467. So we banked yesterday 29. Quite a lot actually. Euro New Zealand. So that was a short from Monday. So that was an RSI extension. This is the H1M5 account you're looking at now, obviously. So this is all the H1M5 market reversal alert CA trades. Short down to there, out, done. Euro yen. That was a long from Friday last week. Out of that, took a while. Short on it now because we're extended on the RSI again. Aussie dollar, US dollar. Short from Tuesday, straight out in the propulsion gap. Look, in, out, bounce, bounce. Propulsion works every time. Pay attention. Euro odd. That's an old scale out. That's a drawdown control on Euro odd that was done from Tuesday. So that got just over that got an ADR basically away from my entry, 130. So that was 146. ADR's dropped a little bit since yesterday. So that's a scale out. Aussie dollar Swiss. That was, look at that for an in out look. RSI extension. That was the first reversal alert. Bang, out, same day. Very nice. In and out on a day. Those three are drawdown controls. So that was New Zealand CAD. So New Zealand dollar CAD long from there. That was a drawdown control yesterday. Added a second position, so on its way to getting out of that one. There's no real targets on that one, so be out up here somewhere. CAD yen, that was a drawdown control. Again, in short on that RSI extension, first entry, drawdown control, second entry taken basically at the swap today, and looking to push back down into that propulsion, but obviously that's probably still in play, maybe, definitely. So we're coming down to ADR at some point, so that's an easy exit. And a US dollar CAD. So that's a drawdown control. So first entry there, RSI extension, and we covered this one already, haven't we? DD control, second entry taken this morning, looking for a push back up into propulsion. So that was yesterday, 0.5%. 0.5% a day is 10% a month. 10% a month is more than 99.9% of traders make. If you can do that, you're profitable. H1, sorry, so let's start with ADRs. ADRs yesterday closed out 328, 0.3% yesterday. ADRs, wasn't many, there hasn't been many ADRs, is there? So got 4 positions on, just singles, 328, that closed out Yesterday we closed out pound odd and New Zealand dollar Swiss. I won't go through them all, but pound odd, New Zealand dollar Swiss, ADRs. I won't do student, there's only two. Pound odd. There you go. ADR hit to the upside, in, out, same day. And New Zealand dollar Swiss. I was going to say, it looks like the same trade. It's the same instrument. There you go. So ADR hit to the upside. ADR on this, whatever it is, but that's above ADR. There's your reversal alert. Pushed up, took out everybody. And then came back down. Exit next day. H1s, we just covered those. H4s did $700 yesterday, 0.76. We closed that yesterday there. Pound New Zealand, pound CAD, and pound odd. That's nice and easy, isn't it? Pound New Zealand, H4 RSI extension, out. Same as the day before. Very nice. In, out, in, out. So that's pound New Zealand. Pound odd will be very similar, I would expect, because they are very similar pairs. That's two positions. Completely different trade. Take that back. Ignore me. H4 RSI extension. Initial entry, second entry taken. Why did that take two entries there? How far away are they? Half an ADR, yeah, right, okay, fine. So yeah, half an ADR in, out. Got two really fast reversal alerts on that by the looks of things. I know, but yeah, straight in, straight out. Oh, we've locked up. And what was the other one? Pound odd, pound CAD. So that's very similar to the previous day. In, out. So it's in and out. So very easy. In and long on that at the moment now, because we're extended on the 4 hour. So going long. That's that one. And then the H1 set file. I'm not going to go through all these, but that banked 1.15% again yesterday. So this is up to 14.7% now since the 14th. So this is half a month. Yeah. Half a month. This has done 14.7%. So extrapolate that out in a month. We're looking at a 30% set file here. Big month. I'm waiting for it to go pop, honestly. This is a bit too good to be true. Typically, in my experience, when it's too good to be true, it's too good to be true. So this is going to hit some drawdown at some point, I think. But for passing prop and potentially trading on prop afterwards, but with reduced risk, I think this might be a very good set file, this H1 one. So we're sitting in 3.5% of drawdown after 2 weeks. And we're banking, look, somewhere between 0.5% to 1.5% a day. So that'll pass prop in a week, as long as you can keep on top of that drawdown. I reckon you'll need 2 weeks to pass. I reckon you'll need somewhere in the region of 8 to 10 days, because what you'll need to do is build that up to whatever the target is. So for example, on a 100K account, you're going to need to build it up to 8K, and then you're going to need to build it up to 8K plus whatever drawdown is. And when you get to that figure, close the whole lot, move on to phase 2, rinse, repeat. When you get to funded, reduce risk by 50% and let this thing just build cash. So it's looking really, really good. But as with everything, when you're forward testing, back testing results are back testing results. Forward testing results are proof. So this is only 14 days into the proving process at the moment. I've seen loaves of bread take longer. Right. Haven't really. I don't bake at all. Lie. Total lie. Just catch up on the chat. Got into EA short, pending order, just below 79% retracement. Whichever one that was we were talking about. Morning, Tony. Came across another prop named Bespoke Trading. No stop loss required. Drawdown on balance. FX, and it's English. The one to look at is Trader's Choice. Bespoke Trading. Let's have a look at them. So I just need to quickly look at the DAX. I haven't got my monitor open. I'm really unorganized. Okay, lovely. Beautiful opening range break on the DAX this morning. So there's your 5-minute ORB. Boom. There's your 15-minute. Bang. Boom, bang. I sound like a... What's that track? Boom, bang, a bang. Need to go and find what that level is. One sec. Boom, bang, a bang. That's a really, really old track from the 60s. I wasn't alive then, but that's what I'm thinking. So we've got the propulsion gap and we've got that level there. So there's these two areas to look at. So I'm not going to bother marking up the propulsion. I would be watching 155.50. And 157.08. Which is ADR. So yeah, basically this level here, keep an eye on it. This is the kind of that when you get a support and resistance area that is within highs and lows like that. Yeah, so it's that kind of area which is very well respected, but it's not an extreme. Yeah, these are, I class them as much weaker support resistance areas. So this is a kind of what I would call a weak resistance. Would you possibly expect to bounce off of it, but quite possibly to get run over fairly easily as well. So ADR is target today to the upside. ADR is the monthly high, March high. So we got a long way to go potentially on this ORB if it's going to continue to do that. We've got these gap fills acting as a magnet below those. So I think I can do without the towel now. Making my neck hot. It's not helping the cooling down of the body, having something warm wrapped around your neck. Bespoke Trading prop. Let's have a look at these guys then. Do they use 8 cap is the question. No time limits, bespoke dashboard, automated process. Why have you taken me to your blog? Oh my God. Sorry. If you're going to launch a website and a prop firm and want to look professional, maybe get rid of the lorem ipsum dollar citamet consecutive bog standard text on your blog. Amateurs. And none of the links work properly. Look, you click on the About Us link in the footer, it opens a new web page. Sorry, I come from a web design background. These are just basic. Shouldn't do this. Let's have a look. Can I trade using malicious practices? I guess the answer is no. A stupid question. Doesn't say what their broker is. I've got a one-step challenge as well. Trader's choice, 10K, standard 10K. So $329. So they're not badly priced. 1 to 100 leverage, 1 to 30 on the standard. That's not bad. 8%, 5% max loss. Max daily loss. It's got a max daily loss, which is fine, but one-step challenge. 1 to 10 leverage on a one-step. So this is equivalent really to Feudal Crest, isn't it? Phase 1 target 10%. Yeah, I mean, it looks okay. But again, why not use my Forex funds or EA? They're better. They're more established. They're proven. They've got thousands and thousands of traders. I've been paid by both. There's just there's no advantage here that would make me go, oh, I'm definitely leaving those guys. They're not cheaper. Their results, their targets are not any better. They're just another prop firm, one of the tens of thousands out there now, it seems. So they look okay though. Dax is off on a mission. Right, let me just catch up on the chat. Morning, Bella. How many thumbs up we've got, people? I can't see the thumbs up now. We've got 79 people in here. I can't see how many thumbs up we've got because I'm not actually watching the stream. 41. That's all right. We're getting there. What is GU doing? I don't know. It's going up at the moment. Was there a specific question about GU? You asked me what it's doing. It's going up. It's been going up for the last 5 hours. Do you have an EA that can help with FTMO account? Pass the challenge. All EAs can pass the challenge, Bella. I do. I have 2 EAs that can help you pass those challenges on the website. Market Reversal Alerts EA and the Opening Range Breakout EA. Whether or not you will pass will be dependent on when you start the evaluation, but they will both pass it if the conditions are right. So what type of risk parameters would you suggest? I recall stating perhaps a 30% decrease in risk. What was I talking about there? Yeah, basically when you get, if you're going to use something like the H1 set file, hedging set file, to try and get through an evaluation, just knock off some risk. Yeah, at the moment that like I said, it's basically doing a 1% a day on average, isn't it? It's £1,000 a day. Yeah, could you live on 500 quid a day? If so, 50% risk off. Take the risk off. That way, you know you're not going to blow the account, and you're only going to make 500 quid a day, which is only 20 grand a month. Only. No, 10 grand a month, sorry, not 20 grand a month, 10 grand a month, which is obviously 8 grand a month because you're only getting 80% of it, which is only more than most people will earn ever in their lifetime. So that's what I would do. Mubo, what's your checklist before you pick a pair for the Market Reversal Alerts EA? You asked, is that the question you asked earlier? Someone asked about picking pairs. We'll have a look at that in a sec. I just want to get the analysis done first. Get that out of the way. Looks like a scam. Not a scam, just another prop firm. They're not really scams, they're just prop firms. Morning Shroud. £1 US sell. Do you trade Bitcoin? Nope. Right. analysis. Let's do the analysis first, and then we'll have a look at pairs, because there's not much analysis to do, which is why I say, because we've got no ADRs. We've got RSIs, obviously, to look at. So we'll start off with the 4-hour RSIs. That incorporates the pound CAD as well. So pound CAD, such a pain in the ass. Sorry, pound CAD, I don't like you. Missed my target, missed the propulsion. We're going to come down here. I know we are. It's just the fact I think we might come up here first, unfortunately. Market structure at the moment would dictate that you're probably going to come there before you come there now. But we might just have a little, let's entice the guys long and then we'll drop short. Let's have a look at retail and see what retail's doing on it. Hopefully, retail are all long. They're not. It's mixed. So there's no advantage plus or minus on pound CAD. So yeah, pound CAD extended to the downside. So I've taken a long. I'm obviously on it short as well at the moment. 4-hour RSI extension to the downside again. So potentially pushing back up again. So this area here where we got the reversal alert. Yeah, if you look at that, which is just under ADR today, potentially that is going to act as a resistance for a push down. We could push back up and retest deeper into that and then push down from there as well. But if you look at it on the hourly, just under ADR, which is just happens to be where the reversal alert occurred, happens to also be a propulsion gap. So it makes total sense to come up to there and then push back down to the propulsion gap down to the downside. So either way on that one, really, pound CAD. But at the moment, it's a long. I'm already still in it short, though. So so it's extended on the 4-hour, extended on the hourly to the downside, but only just. These are not deep extensions. They're just extended. So obviously on the hourly now, that's going to turn off in a minute because that's already off to the moon so far today. US, the other one is the CAD yen. Again, we've looked at this one potentially because it's a weekly RSI, a weekly range extension. So very nice extension to the upside. Should be looking basically for a pullback. Propulsion gap fill. Tick. Got propulsion gap up there, which is that accumulation break as well, and that one there, which is that accumulation break. So we've got still 2 upside targets. So the question is, are we going to come back down and do that? Or are we going to go deeper and do that? Or are we just going to fly for that and go parabolic? In which case, obviously, it would mean scaling into multiples on the way, waiting for that profit take move on the way back down again. So the minute yen is safe haven, we're kind of not so worried about the banks anymore. Hence, obviously, that's why everything's pushing up against the yen, because all the money that went in on the safe haven rush to the yen is being pulled back out again. So we're looking basically for movements back to the downside at some point from the yen, but it's still very, very weak at the minute. So I'm in this. I'm committed short. So as long as I'm within an ADR, I will just get out at some point on this one. But at the moment, it's extended to the upside, so it's a nice looking short opportunity. But it's only just extended. Again, no massive extensions on that. Aussie dollar yen, extended to the upside. Lovely resistance area we're coming up into here. Yeah. So we've got this area here, basically. We've got this propulsion gap to the upside, which has been tested once on the 4-hour. RSI just, sorry, not on the 4-hour. On the 4-hour, we're not quite extended yet. On the hourly, we're extended. Yeah, but we have been extended. We're bouncing around up here at the moment. You can see up here, this is the return to origin on the yen move, which is potentially where we're going, which is ADR today. It's actually 125 ADR today. So if we got a 125 ADR extension on that today and we got up to 80, lovely short opportunity. Right now, you can take it short. We've got this big move, which we haven't profit taked yet. There's been no profit take on this move. So this whole thing at the moment, we're going to get a pullback on it. There's a propulsion gap target to the downside. There's a tiny little thing there, but so yeah, that's coming down. So it's either going to push up into 125 ADR and then come back down and correct itself, or it's going to come straight down and then push up to 125 ADR, one way or the other. But at the moment, it's extended on the RSI to the upside, so I'd be looking for more shorts to start moves on it now. But we'll see, one way or the other, isn't it? Aussie dollar, US dollar is also extended. Sorry, Aussie dollar, New Zealand dollar. Just coming out of extension. So the M5 reversal alert on that one this morning was there. It wasn't extended enough for me. I like to get in at 75 plus. That was 70. Two big targets to the downside, two big targets to the upside. You're banging between the two. 50-50 shot. If you go long and it drops, scale in and wait for it to come up there. If you go short and it pops, scale in, wait for it to come down. Euro CAD. So nice wicks on this at the moment. We got this weak Canadian dollar thing going on. So everything is pushing a little bit against the CAD at the moment. Extended on the hourly, so potentially a good looking long. Lovely targets to the upside. If you look at the buyer scorecard, everything euro at the moment is kind of a buy. So everything is a buy. Euro CAD is kind of one of the weaker ones. There's no retail advantage in either direction at the moment. So if retail start to short this, that will entice the market to go long. So that will give us a +4 on it. If retail start to long it, we will start to get negative retail figures in, which will take us down to a +1, all still positive. So everything on Euro CAD is a buy. And as we are down and extended to the downside, this is a nice looking opportunity to scale in. Hasn't quite got extended enough for me to get triggered on it. That was my, I had an entry there, but obviously I got out of that previous entry there on a sell. So I didn't get into the buy. But we've got a target to the downside at 125 ADR. So look at, that's where it's going. It's whether or not it's going to come down here first. So if you did want to get into this and take an entry there, you've missed it actually this morning. Your 5-minute reversal, that's already happened. Oh, literally just happened on the last 5-minute candle. So there's your reversal alert. Beautiful upside target there to aim for today, but obviously the hourly target is up at 175 ADR. So if you get in here and it drops, scale back in and get out on the way up. Pound CAD we've covered. US dollar CAD is the other extension on the hourly. I'm in this long from here. We've covered this one already, haven't we? So this is got out on a drawdown control, second entry on, still coming down a little bit at the moment, nicely extended. So looking for a push back up into that propulsion. Just waiting. Hopefully the news, hopefully we'll get positive figures on GDP this afternoon, and that will rally the US. GDP figures are a little bit hit and miss. You quite often don't get ADR moves off of GDP. You get positive movement or negative movement, depending what the GDP figures are. But you don't necessarily get huge moves because GDP, although it is important, is kind of an after effect of monetary policy. So GDP gets affected by monetary policy in the same way as unemployment gets affected by monetary policy as well. And everything gets affected by it, obviously. Interest rate rises, but the GDP has less to do with them making a decision on increasing or decreasing interest rates as unemployment does and CPI does. So unemployment figures, if they're going through the roof, they will want to do something about interest rates. Same with inflation, obviously CPI. That is the key driver for interest rates. Whereas GDP, they look at it and go, yeah, we were expecting that. Rather than, oh my God, GDP is dropping, we need to drop our interest rates. They don't really look at it in that respect. So it's less impactive and therefore you tend to get less movement. The gross domestic product of a country doesn't really affect that country's attractiveness or unattractiveness for the currency to invest in. So, but it does move it. So hopefully we'll get some positive, everything positive. Obviously you want it to be green. The more green we've got, the more it's going to push. So there you go. So there's the RSIs covered. I'm just going to quickly cover oil because I'm looking for an entry on this. Didn't get into it yesterday, unfortunately. So the previous trade that I had, that entry there that I got out of there, I'm waiting for this pullback into somewhere in here. I don't know where, to try and get a long back up into here and up into here. It hasn't pulled back enough yesterday. I was hoping off of that negative. So yesterday, 3:30, we had the oil inventories. We got a nice negative reaction off of oil inventories, and then it sat sideways and it sat sideways. So we didn't, what I was hoping for was a nice ADR hit. We didn't get it. So maybe watching this level, I think I said yesterday, didn't I? That was ADR, I think, wasn't it, yesterday? So where are we? 30. That's 40. That was 42 pips to the downside from that high. So that was just 1.5, 1.25 ADR. That would have been beautiful. So again, if we get an ADR hit to the downside today, I'll be looking for entries on that. But I don't want to take it from where it is. I don't really want to scale into it. I just want to get in. So I want to buy it on a pullback. So RSI extensions, anything like that. I'll be keeping an eye on oil, looking for $80 a barrel. David, just looked, bespoke use 8 crap. Yeah. There's a load of these brokers using 8cap now, because 8cap are basically 8cap have got a prop firm. They have a basically I can set up this afternoon as a prop firm. If I go to 8cap broker and go onto their set yourself up as a prop firm page, press a button, fill out a form, they will give me a template for WordPress, and basically I'm a prop firm. So we could have the market structure trader prop firm this afternoon, literally. All funded by 8cap. So not interested. Pound CAD is gaining and momentum, definitely going up. Correct. Pound CAD is going up. I have eyes too. I can also see the green candles. Sorry, I'm very sarcastic if this is your first day in here. Forex ADR signals. GN is a nice short. Mate, this isn't a signal service. If you keep doing that, I'm just going to boot you out. It's not a signal service. And yeah, so Ratib, you are the first today. Congratulations. You get the gold jacket. Gold. So we looked at this one yesterday. Obviously, we look at it every day because someone always asks for gold, even though I don't trade it. So everything I say about gold, take it with a pinch of salt because I don't trade it. But it is just a US dollar cross at the end of the day. So therefore, if the US dollar goes up on GDP, this will come down. If it goes down on GDP, this will go up. That is your propulsion upside target. We've got so many targets to the downside. So obviously we had the run up into gold off of the banking crisis when they were running into safe havens. And that has finished. We've got a symmetrical triangle forming at the moment. So when we get a break of this, we'll get a move in one direction or the other. However, when you see these sort of contraction patterns starting and they just go like this, there is still a very high chance that this will just keep contracting. It needs a news event to drive it. Yeah. So it's a US dollar cross. Without US dollar news, nothing moves against the US dollar unless it's got its own news. Gold doesn't get its own news because it is a commodity. So at the minute, we're waiting for something to happen. So really long it a little bit, short it a little bit. Sorry, Forex ADR, I'm just going to mute you for a minute because you're just talking rubbish. I don't trade Bitcoin and I don't care if it's going nuclear. So sorry, you just put me off. So yeah, shorts or longs, one or the other. I don't know the answer to that one, but what you could do is drop down to M15 or M5 and take a reversal alert, whichever way you fancy it. I have to say, I prefer it long. Intraday, I prefer it long because I think it makes more sense to come up here and then drop because there's so much target, there's so much downside potential. It would make sense just to get that sorted first so you haven't got to worry about coming back to it later. So it would make sense for them to move and manipulate up to the highs. Let's have a look at retail positioning on it. Yesterday, retail positioning was flat. and it is still flat. So it's 52.48. So there's no advantage either way from a retail perspective. So there's no real reason to drive in any direction. So I would look at that and then look at shorts out there. DAX is pulling back. So this looks like we might turn into a nice trend today. I haven't got my laptop over, I can't see my position. Just continuation up to that resistance, which is 155.50, and then we'll see if we can get that ADR run. So a little bit more upside at the minute. ECB news in 10 minutes, according to Financial Juice. ECB economic bulletin. I don't think that'll be anything that we don't know, but yeah, 4 minutes till potential volatility. David, to ensure a positive risk to reward ratio, do you think setting the minimum distance in between trades to 0.4 of an ADR and targets remain at 0.5 of an ADR would make much difference? I don't know. Backtest it, David. Just backtest that. Don't forget your distance between trades. That's 3 shorts, pound odd. So your distance between trades, yeah, has nothing to do with the target specifically for getting out. The 0.5 ADR target, yeah, is based on the accumulative pip count of those 3 positions. Yeah. So if you space them closer together, that doesn't necessarily mean you're going to get out faster, because the spacing, as you can see, is never going to be exactly the same. That is a bigger gap than that one, because it's dependent on when the reversal alerts happen. So if this pushes like that, and it doesn't get a reverse alert till up there, you're going to get a bigger distance between the trades anyway. It's got to move half an ADR in pips, which is 62. It's got to move 62 pips into profit. So this one here at the moment is, I'm doing rough calculations here, 68 pips in profit. This one is 13 negative. This one is 96 negative. So the overall pip count, although we are in positive territory financially, yeah. So if you look at the break-even line, yeah, we're in profit on the position. The pip count, however, is negative. So just charging up my calculator. So what did I say? Negative. So we're negative 99 minus 99. We are negative 7 minus 7. And we are positive roughly 72 plus 72. So we are sitting negative 65 or something like that. I don't know if that actually worked, that calculation. I must get another. I should use the one on the PC really, but and that's the reason when you look at this set file, myself included and a lot of people, as well as having a closing percentage ADR figure, also having a monetary figure, because close or when X money in profit. Because when you've got multiple positions on, you will often hit the monetary take profit target before you will ever hit the pip target, because it depends on the spacing. And that's why these two are there. And quite often with most of the other set files, you find they're used in conjunction with each other. Yeah. So to get to a $500 profit, you may only need to go into something like 20 pips instead of 60, because don't forget your position sizing is going to be different. Look, we got a 0.19, a 0.36 and a 0.47. So the 0.47 is going to make a lot more profit and get you into a decent amount of money. This one, let's say it moves down to here. This one will get you into a decent amount of money. That might be $500 in profit there, but the total pips on it might be -10. So you're reducing your spacing. All that's going to do is potentially on a squeeze get you into more positions, but it's not going to make, I don't think, a lot of difference to your exit. But I'd test it. This set file at the moment isn't using a monetary exit at all. And that's, again, something that's on my list to test. And I thought, well, let's give it a forward test as it is. And then we'll see. Again, it's something I'm eyeballing is this column. We'll see if the stuff that sits here in like $650 of profit and doesn't get banked. I'll be looking at it thinking there's a danger of this $650 turning into a negative. So maybe we should be using a half percent of balance bank as well, or 1/4% of balance bank or something like that. But again, this is what testing is all about. Testing, obviously. 9 o'clock, we had the news. Let's see what the DAX did. Not a lot. Down. Kuldeep, good job. Yeah. Some people just come in, they just know everything, and it's fine. If they know everything, then you have to ask the question, hang on a minute, if you're offering signals, why are you here? It's morning this side, so good morning. Morning AstroSeed, it's morning here. Are you providing free signals on Telegram? Nope. Learn to trade. Johannes, just a question, going to ask this nicely. What happens with all the indicators and so on if someone asks about gold again and you don't want to trade anymore and you're gone? Nothing. I don't sell anything at all, do I? I get this question all the time. No, I don't get this question all the time, but I do not sell any indicators at all. All of my products I license to MQL5, and you buy everything through the MQL5 marketplace. You are entering into a contract with MQL5 to purchase indicators, signals, expert advisors, services, whatever. Yeah, I don't sell a thing. I get paid a commission by MQL5 when I sell indicators and EAs. I don't sell you anything. You are not buying anything from me at all. I build stuff, stick it up there, they sell it, you pay them, yeah, on your credit card statement. The payment is to mql5.com, not to me. So if I disappear tomorrow and I never stream and you never hear from me again, nothing changes because they have all the indicators and the EAs, not me. I have the power to remove them from the marketplace, but that's all I can do. Not that I ever would. There's no point. Why would I ever do that? Well, I suppose I could do if I was really nasty, but I don't know. I wouldn't. But yeah, so that's what happens. So and there's people send me. I had a message yesterday. Actually, I've got another one from him this morning. A guy messaged me yesterday, and he sent me his transaction details for buying a product on MQL5 marketplace, and I said, well, go and contact them. He hasn't. Something's gone wrong with the transaction. I don't know. I see nothing in the admin area of MQL5. What I see is an order number, an amount, and a product. I don't know who's bought anything. I don't know what. I know nothing. I don't know what date, what time. I know nothing. I don't know the date, but I don't know the time. I don't know how they paid. I don't get fed any information. I get no information about customers at all. So people say, I've just bought this. I've bought your indicator. And I go, all right, brilliant. I've no idea whether they have or they haven't because I can't see anything. You don't get that information because you're not buying from me. It's a marketplace. It's like Amazon. You buy something from Amazon, you buy something from Amazon. There's some other bloke that has put the products in Amazon and has put them in their warehouse, but you buy it from Amazon. Same principle. Well, it's a little bit different, but it's pretty much the same. That explains. Kuldeep. Mumo asked nicely, yeah. I'm going to answer that question about picking pairs in a minute. Your bootcamp and live sessions give much more than usual signals. Yes, exactly. What happens with your battle with pound CAD a few days ago? I'm still in it. Big Les, we covered that this morning. So I've just done some aggressive drawdown control. So that position there was an aggressive drawdown control position. So I've used that, banked that, and I've scaled out of a little bit of that, and I've scaled out of a little bit of that. So there's my average sell, which is well within an ADR. And I'm also now in a buy, so I'm hedged. So if this comes down basically 3/4 of an ADR today, I will probably close out my shorts. Well, the EA will, not me. I'll just let the EA do it. But it's only in 0.42% of drawdown, and I've managed to bank 0.5% off of it, so it's okay. Refinus MQL5, can I have their contact? Yeah, it's on their website. I purchased EA yesterday, then I got an error twice and I was charged twice. Yeah, you need to contact them. Just go to their website. Go to, like I say, I'm not MQL5. You have entered into a contract to purchase a product from the MQL5 marketplace. Contact MQL5 support. I don't provide that because I'm not them. But if you go to their website, there'll be a contact us link. I think it's in the footer. Go and click on it and contact them. I can't help you with anything to do with any of that at all. And the reason I put my stuff there is for ease, because obviously, as you know, the entire software world and everything is riddled with pirates, which is why I don't sell any courses. Because if I was to spend thousands of hours creating a course and this huge material, and I put it up on the web and I sell it for $2.5 grand, within a day it'll be all over the web for free. What's the point? So the reason I do it through the marketplace is because it's all very easy. Everything's delivered there. It's all encrypted. I don't have to worry about any of that stuff. Just to let you know. Right, how to pick pairs. So this is a question that's been asked in here a couple of times. So if you're using the market reversal alerts EA, you need to ideally, if you can, limit your exposure on instruments to keep your exposure down, so that if something squeezes, you don't get hurt. So picking instruments is not, there's no exact science to it, but I'll show you the two ways that I would at the moment look at picking picking instruments. So the first one is you can use the buyer scorecard. So if you go over to the buyer scorecard, you can say, right, I'm going to stick the EA on those pairs long. I'm going to stick it on those pairs short. And I'm going to stick it on those pairs and let it trade long or short. Yeah. And then stick it on every single pair. So if you're going to do that, what you need to do is obviously be aware that you are going to get overexposed on something. So if you are putting it long on the Swiss yen, the US dollar yen, the euro yen, yeah, and potentially on the pound yen, the CAD yen, and the New Zealand dollar yen in both directions, it could in effect get into 6 trades on XXX JPY long, which gives you 6 exposures long. In the marketplace at the minute, stuff is a lot of stuff is very range bound. There's nothing with a very strong fundamental bias in one direction or the other. Yeah, if you look at the fundamentals, everything is doing the same thing. Inflation's going up, interest rates are going up, unemployment is unstable, GDPs are flattening, people are going into recession, countries. So everybody's in the same boat. So there's no, the US dollar is 1,000 times stronger than the Aussie at the minute. There's none of that, which is what we're used to. The market is very sideways and very, very functional at the moment. It's very easy to trade at the moment. So you could pick you could basically do it like that. How I teach in the bootcamp is to expose yourself to no more than two currencies at once in one direction. So you could go too long on the JPY. So with that, let's using this as an example. The way I teach in the bootcamp is you get two nice H1 M5 setups. So you go long on US dollar, yen, and you go long on New Zealand dollar, yen. So now the yen is off the table. You cannot go long on anything else against the yen. You're keeping your exposure at too long against the yen. You've also now got, sorry, two shorts against the yen. You've now got two long exposures as well. You've got a US dollar exposure long and a New Zealand dollar exposure long. If, however, you see two big setups to go short on the pound yen and go short on the euro yen, you could take those. Because then what you're doing is you're having two exposures long with those, and then you're having two exposures short with those. Yeah. So if you're going long New Zealand dollar yen, you're exposed short on the yen. If you're going short new pound yen, you're exposed long on the yen. So you're hedged. So it doesn't matter which way the yen pushes. Two of your trades are going to go well, and two of your trades aren't going to do well. Yeah, with me so far. So that is the ideal. Never expose yourself more than twice in a direction on a currency. And that's what the Trade Manager dashboard is there for, to show you your exposure. So at the moment, I've got a double exposure long on the US dollar, and I've got one exposure short on the US dollar. I've got two exposures long on the New Zealand, one short on the New Zealand. I've got four exposures short on the pound. That's bad. Yeah. I've got five exposures long on the yen. Bad. Five short CAD, one long. So if you cancel those two out, I've actually got four short exposures on the CAD. Bad. Yeah. So you can do it any way you like, and basically it's all down to you and your risk exposure and your worry with risk. So at the moment, I'm loose. I'm in a risk off, if you like, kind of mood, because there's this is me personally. This one obviously is running on every instrument anyway. All of the EAs you see running on the VPS are running on every instrument. So there's four strategies running on there, all running on every single pair. On my own account, I don't run every single trade. I run some trades, not all of them. But you can do it that way. And the trouble is, if you get a squeeze, it's going to hurt. Yeah. So you can pick and choose the trades that you get into. So what some people do is they will pick a specific number of instruments. So for example, Euro yen and US dollar yen, they will pick, and they will set it up for buys only. So if you're going to do that, what you're doing is you're exposing yourself to JPY twice short. You're exposing yourself to US dollar once long. You're exposing yourself to euro once long. Can't see that, can you? Oh, I didn't mean to do that. Okay, one sec. Let me just move my head up out of the way. Yeah. So what you can then say is, right, I want to go euro. I'm going to put it on Euro New Zealand and tell it to go long only. Yeah. So that gives me another exposure euro long, and it gives me a New Zealand dollar short. Yeah. So now I can't take any more yens short. I can't take any more euros long. So when I'm looking at going Euro Swiss long, I have to say no, can't take that. So that's off the board. I can't trade that, because if I did that, I'd be exposing myself to 3 euros long. Euro pound, can't use that anymore because I'm already long twice euro. US dollar CAD as a buy, that I can. So CAD exposure would suddenly go short. US dollar exposure would go long. Yeah, so I can take that one. So now I can't take any more US dollar pairs long. So coming down to the bottom, if we look at New Zealand dollar, US dollar short, I can't take that, can I? Because if I go short New Zealand, I'm going long US dollar, that overexposes me on the US dollar. So New Zealand dollar, US dollar is off the board, can't trade it. CAD Swiss, if I go short CAD Swiss, that gives me a short on the CAD and a long on the Swiss. Tick, I can trade that short. New Zealand dollar Swiss, that would take me short New Zealand, tick, long Swiss, tick. So I can trade New Zealand dollar Swiss. Yeah. So look at my exposure now. I'm fully exposed long on the Swiss, short on the CAD, short the yen, long the US, long the euro, short the New Zealand dollar. So what am I missing? Pound. I haven't got any pound pairs on. So I can look now at some pound pairs and go GB. Okay. So I'm going to pound pairs. So pound US dollar, can't use that. If I go short that, I'm going long US dollar, no use. Aussie dollar, US dollar is no good. I've got no Aussie exposure either, right? So I've got no Aussie exposure either. Pound Swiss, if I go short pound Swiss, I'm going short the pound, long the Swiss. I'm fully exposed on the Swiss, can't take it. Pound odd, if I go short and long on the pound odd, yeah, that gives me a long and a short exposure potentially, and a long and short exposure on the odd. Tick, so I can take that one. So I've now got double exposure on that in both directions potentially. So do you see what I'm doing? I'm building up a what would happen in a worst case scenario type of exposure. But we've got no exposure in the opposite direction on them. Yeah, so a lot of people, if they have exposure set up to just run with the buyer scorecard, if you like, they will only go short on the CAD. They wouldn't entertain taking a long on the CAD, which is absolutely fine. But you can hedge, and I don't really see a problem with hedging. When I first did the bootcamp, I kind of advised against hedging, but there is a section in the bootcamp about hedging. And there's no problem really hedging yourself. And what I mean by hedging is not taking a long and a short to pause a position. I'm saying taking a long and a short, and it doesn't matter which way it goes, you're always going to make money, and you just deal with the one that does. Normal process, yeah? Only deal with the stuff that's getting into drawdown. Everything else, just bank it. It doesn't matter, does it? So those are your, that's one way of doing it, obviously. And that's probably the way I would advise it. So there will just be stuff that's off the books. You're not allowed to trade it. If you concentrate on just these, obviously, these are the ones we're expecting to get more movement because we've got cop bias the right direction, fundamentals on board in the right direction. And at the moment, we've got retail. And when retail goes the other way, these go range bound. So they're still tradable. But at the minute, it's very difficult to pick pairs because this is really going into these plus sixes and minus sixes only because we're getting retail flipping long and short and long and short. So actually, when you take the retail out of the equation, these are plus fours, which is ever so slightly buy, but there's nothing wrong with selling it either. I'm taking trades in both directions. They're all working at the moment because the market is very much like that. So that's one way, obviously. The other way is the way that I teach in the bootcamp, which is using the daily moving averages. So the 2472, which is the monthly and quarterly moving averages for the institutions. So this is the institutional reporting periods. So using those, and basically not interested in taking shorts on the pound CAD. Fine, so you stick the EA on there and you tell it to go long only. Yeah, you may never get an entry. So for example, this is the daily chart. Let's look at the 4 hour and pound CAD. You are taking longs only from here. You got no entries. You're just having one now. Look, literally, there is a signal to go long now, which I've just got into. First one since February. Yeah. So you're going to get less opportunities by only going one direction, obviously, because we are expecting it to go that direction as it is. So the pullbacks have got to be steep for you to enter. So kind of what I'm trying to say is really there is no right and no wrong. But if you overexpose yourself, you will at some point get into a squeeze in all likelihood, and it's going to hurt. So you've just got to be mindful of it. So for example, the CAD at the moment, I've got overexposure short. If the CAD flies long, I'm going to go into drawdown on 4 positions at the same time. But the other thing you've got to bear in mind as well is there are other pairs interacting with the CAD. So although I'm short on the CAD, if I get a really, really weak currency against the CAD, so if the CAD pushes up really, 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 really strong, however, something else pushes up even stronger, like the US dollar, then the US dollar CAD is going to come down. So even though the CAD is strong, it's less likely to get into a squeeze because some of these overexposures that I've got are actually going to get battered down anyway because there's 2 things moving. The other thing you need to take into account as well is you've got 3 different sessions in the day. So your euro, your pound, and your US dollar pairs are all going to move in London and New York. Your Aussie, your New Zealand, and your yen are all going to move in Asia. So where you've got a really strong Canadian dollar, where you've got a really strong Canadian dollar, which is pushing really hard in London, yeah. So if you're short on the Canadian dollar and it goes parabolic, yeah, there's nothing to stop the yen pushing it back the other way, yeah. When you're trading a euro pair against a euro pair, or a London New York pair against a London New York pair, for example, these are the ones which are more likely to squeeze because during Asia they do nothing. So if you've got a massively strong pound and a massively weak New Zealand dollar and it's flying up like this and you've got exposure the other way, there's no other session that can help you undo it. So trading the London New York crosses against the Australasian crosses is also safer because you get push and pull. When one of them's sleeping, it gets pulled the other way. So there's a hell of a lot to take into account when you're looking at exposure, and there really is no right and wrong. But if you want to go on every single pair, if you reduce the risk on your entries, so instead of using a 0.25% risk per entry, for example, drop that down to a 0.15% risk, and you get into overexposure, what you're actually doing is not really getting massively overexposed, are you? What you're doing is you're splitting your exposure across the board. And don't forget, if you're going on every pair in every direction as well, you're going to hedge yourself. So if this Swiss franc goes up or down today, I couldn't give a monkeys because I'm going to bank something, which gives you your bigger pot, and you can use that bigger pot to keep on top of drawdown faster. But what you will find is, like with pound at the moment, yeah, you can see where my problem child is at the moment. It's the pound CAD, and also my second problem child is the pound New Zealand. Why? Because the pound is pushing. I'm short, so I'm getting into trouble. This is what I mean. When you get into trouble, you're going to get into trouble on the same thing usually. So if something flies and it's got a parabolic move based on news, you're going to be in trouble on all of your pound shorts. If you've got pound long, however, those are going to play out. And you can use that profit to do immediate drawdown control if you're overexposed. Yeah. So another way you can look at it is you could look at this. Let's choose the pound actually as a good example. You could look at this exposure as a whole. So what I normally do is when something's getting to around about 3% in drawdown, somewhere between 2 to 3% in drawdown, that's when I'm not uncomfortable, but I'm thinking, not quite right, is it? Something's a little bit more wrong than I was expecting to be on this trade. So that's when I would normally start to think about doing aggressive drawdown control and maybe doing some drawdown control with other profits. What you can do is you can bunch them together. So on your pound exposure, if you've got 4 positions on short, as we have here, what you can do is you can say, I'm going to bunch these all together. So there's my pound CAD exposure, my pound Swiss exposure, my pound yen. Let's do it easier. There you go. There's all my pound exposure in one box, rather than drawing 4. Yeah. So my total percentage exposure on the pound is 1.4 plus 0.13 plus 0.41 and a negative, so that's a flat basically. Yeah. So my exposure on it is 1.89, let's say 2%. Yeah. So my exposure on my pound shorts, which is all of these, is 2% at the moment. Am I worried about it? Not massively. if I was worried about it, what should I be doing? Drawdown control or aggressive drawdown control? Which one should I be focusing on? The one that's in the biggest problem, which actually is not that one, it's this one. Yeah. The one that's the biggest problem is the one with the biggest drawdown, not the one with the most positions on. Yeah, because your positions can be different lot sizes. Your drawdown is the amalgamation of your position. Every single one of these is a position. These are individual trades within the position. Yeah, this is your position in the market. At the moment, my exposure is 3.6%, $4,000. Yeah. Does that help? Hopefully that makes sense. So pound CAD, for example, here, I'm hedged on the pound CAD, as you can see. So this is going into profit as that's going into loss, which is helping me keep on top of this. But when that banks, that's going to shoot up, isn't it? My exposure there. So I might want to use that actually to do a bit of drawdown control. But for me, and as I teach in the bootcamp, this is what it's all about. These individuals make a whole. And as long as this is okay, I'm okay. When this is getting big, that's when I'm thinking, right, where have I got to focus my attentions? There at the moment, pound New Zealand is the big thing that I would want to, when I get to a decent amount, that's where I'd want to focus my attentions. And at the moment, I haven't got anywhere I want to focus my attention because everything's just up and down. Hopefully that answers that. Morning, Kibria. Morning, Ike. If I haven't said morning already, can't remember. MQL. Dabas. So I got a Mac. That's a shame. You recommended VPS, which I blew. Which I blew. You are running MT4 on your PC, but just for backup, you're using a VPS, or are you using a Windows VPS? You can only get Windows VPSs. So yeah, don't trade on a Mac. BLVE. Believe. Sorry. You got to remember you're talking to a 50-year-old bloke. All this stuff that's all short that we've had since mobile phones, I didn't get on that. So when people use abbreviations, I go, what? You've spelt it wrong. Yeah, so VPS. The VPS takes all the trades. So the VPS has all the MT4 set up. The EA is all set up on the MT4s. On the Windows VPS, that takes all the trades. My terminal that you see here is for me to monitor everything. And obviously I will take trades on it, but it's all done with the VPS. When you do bootcamp in Australia, the bootcamp's online, Kuldeep. Yeah, here, look, just go and watch it. It's all on YouTube. It's all free. I don't do personal bootcamps. It's all there for free. Morning, Gable. Morning, Derp. Yarp. How do you manage these on a funded account with difficulty? It's very hard. I'm going to start 2 new Fidelcrest have just launched a 2-for-1 offer. So I'm going to go and sign up with Fidelcrest today. Because they have a 2-for-1 offer at the moment. So I'm going to go and buy a couple. If you remember, I don't know if any of you in here, some of you were, but I did the challenge about 2 weeks ago and passed that. This is actually funded, which is very nice. So you actually get a profit share off of this, which is lovely. Verification phase. However, I blew the verification phase. So yeah. But anyway. So yeah, I'm going to do this today. I'm going to go and sign up with another one of these. this one here. And the nice thing about it is your profit target's only 5%. So this is no good for scalping. Oh, you can't use EAs, can you, with these guys? I'll tell you what I'm going to do. I'm going to drop them an email. Because you can use EAs, but you have to get permission. So they're looking for real traders who can trade based on their own analysis. I've just basically got an EA doing the analysis that I would do as a human. So I am just replicating myself, obviously. They will grant exceptions, but you have to contact customer support. So one other thing I could do is potentially copy trades from another account is not allowed due to risk management. I was just going to say I could copy, but I can't. So I think what I'm going to have to do is set up email alerts. So every time a trade is taken, I'm going to manually take that trade. Another thing I need to check with them. I don't know what their rules are on martingale. Let me search for strategy. No. Your trading strategy is total up to you, but we're looking for consistency. Right, so they don't have any issues with lot size increments or partial drawdown control, which is fine. You can take multiple challenges. Okay, so yeah, sorry. I just suddenly thought you can't use EAs, which is a pain in the backside, but anyway. Sorry, I was answering your question. Yeah, Bootcamp. Yeah, sorry. There is no, I don't do them in person. It's done on, it's all online. Just go and watch it and then come in here. This is kind of like the Q&A session for the Bootcamp, if you like, which is every day, twice a day. Oh yeah, how do I manage them on a funded account? That's the question I was answering, wasn't it? Because that prompted me to go and look at Fieldcrest. So if you're position trading on a funded account, the thing that will get you will be the open drawdown. Yeah. So this is 4% at the moment. It's banked 14%, which is fine. Lovely. It's passed twice, isn't it? Or many times. But the drawdown is sitting at 4%. So when you start an evaluation, what your drawdown will go up to is very much dependent on what the market does, isn't it? So if the market conditions are favorable for whichever strategy you're running as a position trader on the account, you'll be fine. If the conditions aren't favorable, i.e. you go into a multi-instrument squeeze on day 3, you're going to fail. There's absolutely nothing you can do about whether you pass or fail on an evaluation. An evaluation pass or fail is dependent on the market conditions when you start the evaluation. I did this session on this yesterday afternoon, just before the end of the live room yesterday in New York. You know, you start an evaluation on a Monday. I was looking at the opening range breakout, I think, on the NASDAQ. But yeah, I mean, as an example, that's probably not a good example. But if you start an evaluation with a strategy, right? And let's say, for example, you shorted it here on the pound CAD, yeah. You went into drawdown instantly on 3 positions, and you sat in drawdown for a week, and then it pushed against you, right? If you'd started your evaluation that day instead of that day, your results are totally different. You got in, you got out, you banked. Yeah. So if you started your evaluation on that day, you would have gone 3 positions and out. Yeah. So the day that you start your evaluation has 100% control over whether you have a quick evaluation pass, a slow evaluation pass, you trade for 30 days, don't hit target and have to reset for free, or whether you blow it within 2 days or within a week. There's absolutely no control any trader has with any strategy, whether it's a position trading strategy, a stop loss strategy, trending, mean reversion, opening range break, scalping. Nothing you can do as a trader with your strategy will make you pass or fail an evaluation. You will pass or fail depending on what happens the second you press that button or your EA presses that button. Yeah. So you have to just take evaluations and you will get through some evaluations. So I will take 10, 15 evaluations a month. I will pass X number of those evaluations. The past accounts I will trade up and withdraw the profits from. The failed evaluations are a cost of doing business. So if I took 10 100K valuations, that would cost me $5,000. I've only got to make $5,000 out of one of those past evaluations. If I pass 3 out of the 10, I've got to get 3 of those accounts now to trade over $5,000. If 2 of those blow and that one does 10 and I withdraw that 10, what have I done? Made 5 grand. That's how you play prop. So I won't start the same evaluation on the same day with the same strategy, because that way all I'm doing is trebling my risk. If I get 3 evaluations, start with the same strategy, start one on a Monday, one on a Wednesday, one on a Friday, they will all have completely different results over the period of the next 7 days to 10 days, or however long it takes for that account to either blow or pass. But I have no control over that, do I? Because I don't control the market. I have a strategy that has an edge, and the long-term edge plays out perfectly. But whether or not the short-term edge plays out within the 5, 10, 15 days that I started the evaluation within their rules has nothing to do with me or anything else. It's to do with the market. And you can't control that. So you get in, you let it do its thing, and it'll either pass or it'll fail. Beetle crest. Yeah, took the challenge, passed it first time. One sec. I can show you. Just want to make sure I can show you this because I don't want to show my details. But there you go. So phase 1 passed. Fine. Phase 2 failed almost straight away. Yeah, because I didn't do anything different here to here. I did the same thing, same strategy on that and that. It's just that when I started doing the evaluation, everything went fine. When I did this, everything went wrong. I have no control over that, do I? I did the same thing as I do every day and I have been doing for years. That week just wasn't the week. That week was the week. What you need to pass an evaluation is week 1 to be a good week and week 2 to be a good week. Then week 3 or fortnight 3 or month 3, whatever it is funded. Yeah. Whether or not you get paid, and 85% of funded traders do not, because they blow this level. Yeah. Whether you get paid or not is not down to you. Your strategy was great in week 1. It was great in week 2. Is it going to be great in week 3? Ask the market. Watch. You can't control it, can you? Yeah. That's what you've got to do to get paid in a prop firm. You've got to have 3 lucky weeks, 3 lucky fortnights, 3 lucky months, 3 lucky periods of time where you execute your strategy in the same way as you do. I've been position trading for nearly 5 years. Have I had losing months? Yeah, loads. Never had a losing year, but I've had losing months. So if I was doing an evaluation on those losing months, I don't get paid. But the other 10 months of the year where I'm not losing, I'm getting paid very handsomely. It's a long-term goal. The prop firms know that every good trader is going to have a P&L that looks a little bit like this. What's that? A blown account. What's that? The trader's normal account without those stupid rules in place. This is what they play on. This is why they make so much money out of evaluations, because this is a fail, this is a pass, this is nothing, this is a okay, this is a fail, this is a pass, this is a fail, this is a pass. Depends which day you start, doesn't it? Nothing to do with your ability or anything else. So you will either pass or you will fail. Hope that answers the question. But yeah, go and position trade on a funded account. You'll win some, you'll lose some, but you have no control over which ones you win, which ones you lose. Dabas, I did a step 1 and a step 2 and blew the live account on FTMO. There you go. I should have read the next comment and I didn't need to explain any of that. 5%ers is good. No, they're not. They're terrible. I did one with 5%ers. I couldn't get any leverage on. Well, actually say that. No, I'll take that back. 5%ers are not terrible. They've got a really good bootcamp, really low cost entry to funding. However, you only get 1 to 10 leverage. I can't do anything with 1 to 10 leverage. I can't scalp with it because, right, if I go the DAX, right? So the way I scalp when I'm manually scalping is I go long, yeah? And it goes pop, and I go, brilliant, I'll buy the next pullback. No, you can't. Why? Oh, I've used up all my margin. On one trade, that's 0.5% risk. It won't let me put one, I can't risk 1% trade. I can't, it won't let me. On M5, scalping the DAX, I can't get 1% of it on a trade. How can I make money scalping if I can't push a winner? When it goes into profit, I need to add position size to it. If it won't let me add position size, how can I bust an evaluation? I can't do it. Drives you nuts. You can trade FX with it, fine, but you can't scalp it. And I scalp on prop. A lot of my money is scalping on prop. So you could position trade with the 5%ers, but you can't scalp. So don't try and scalp. That's all. But yeah, Dabas, you are absolutely within the normal 85% of people don't get paid. Out of the people that pass a funded account and do get paid, yeah, less than 1% of those people that pass an evaluation and get paid. Right, so let's do the maths. We're going to need help of our friends at My Forex Funds for this. Where's the blog gone? No. I've done this before, so if you've seen this before, you can go off and make a cup of tea. Right, so 37,000 active live funded accounts from valuations in February, right? The pass rate for phase 1 across all evaluations is 19%, which means that 80% of people fail phase 1. Of those 19% that pass phase 1, let's say we've got 100 people taking evaluations, right? So we've got 19 bodies left at the end of phase 1. Of those, 42% of them will pass phase 2. We're left with 8 traders out of 100 now have got a funded account. Okay. Of those, where's the statistic? I'm not. I think it's in another. It's in one of their previous results, but I can't see the figure in here. But it's 85%. right? So out of these guys, 85% of them will not get funded. 8 times 15% is 1.2 will get paid, right? So 1.2%, 1.2 people, one in 100 people that do an evaluation will get paid. Yeah. This has taken you a minimum, bare minimum of 17 working days, pretty much an entire month in trading to get that one person over the line to get his payment. Of people that get paid, less than 1% of them hold their account for 3 months, which means that if we multiply these figures, and let's say we start with 1,000, we get 10 traders actually get paid. Of these 10 traders, 1%, can't even do the maths, I'm going to have to go up to 100,000 here, right? 1%, which is basically none of them, hold their account past the second month. Because to get an equity curve that doesn't have a drawdown at all, that blows a rule, is virtually impossible. So when you look at these prop firms that have scaling plans and go, hey, you can trade $4 million, all you do is you start with 100K and every month we double it, double it, double it, double it. Nobody has ever got there. Nobody, ever. And they won't ever, because you cannot have a strategy that does that. It will have that. That will blow an account. Yeah. So the way that you make money in prop is you play their game. You take 10 evaluations. You pass 30% of your evaluations. You have 3 funded accounts. Of those 3 funded accounts, you pass 30% of them through to payment stage. Yeah. So you blow 2 of your funded accounts. The one that you get over the line, you make sure it makes more than the cost of the evaluations you spent in the first place. And as soon as you get to that figure, you stop, you withdraw the money, and you hope to hell you can trade it for another couple of weeks to get to another payday. But that account will be gone within a month, 2 months max. Yeah, that's how you do prop. You can't do one evaluation, trade it, pass, take the second stage, pass, get funded, keep it, grow it, grow it, grow it. Because that there isn't a trader in the world that isn't going to get a 10% drawdown on their account, or at least a 5% daily if they're holding positions. At some point, there's going to be a news event, and that news event where you're holding your positions is going to go against you, and that is going to blow you in either one way or the other out the water. Or you can reduce your risk, which is what the people that hold the accounts for 3 months are doing, is they're going in hard with like 1% profit. I can't really type at all today, draw rather. 1% profit. Oh my God, look at me. 1% risk per trade. And they do that, pass. Do it again, do it again. Yeah, get funded, and they drop their risk down to something like 0.2% per entry. That way, you've got a very, 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 very small chance of blowing your account, haven't you? But you're also never going to make anywhere near the money you're used to on the way to the funding. This is the problem. We get accustomed to doing $8,000 profit on a 100K account in 5 days with my Forex funds. That's the target. The minimum is 5 days. The target, the maximum is 30 or 60 or whatever, doesn't matter. But because there's a minimum of 5 days, that's what we all aim for. Try and get 8K in 5 days. Why? Because we're greedy and we want to get funded fast. We can't wait because everything gets delivered the same day we order it these days. What do you mean I've got to wait 5 days for my money? No, I want it now. E8 will do that for you. How many times do you think they blow those? But yeah, anyway, so that's how it works. So you're accustomed to making 8% gain in 5 days. Yeah, that's 32% gain on your account per month. There isn't a professional trader on the planet that makes 32% a month consistently. There isn't a professional trader on the planet that can make 32% 2 months in a row without gambling. This is what you're doing. So when you suddenly drop down to 0.2% instead of 1% risk, you make 1/5 of the profits. That's not good enough. So you up your risk and you blow your account. And it's the never-ending cycle, back to starting evaluation, get there, funded, blow it. Get there, funded, blow it. Who makes money during this process? Prop firms. That's the real world, people. But it's doable. That's really annoyed everybody, isn't it? Nobody likes me anymore. All the thumbs downs are going to come in now, aren't they? Because I've blown everybody's dreams. Gabor, how to control drawdown on a funded account? Yeah, I think we just covered that, haven't we? That's how you do it. So the way that I control drawdown is I scale out at 0.75 ADR. I scale out with a third. So if I get in, right, so let's say I take a short here. I'm going to buy. Tell you what, let's do. I'm going to buy here. Yeah. If this pushes down 0.75 of an ADR against me, which is 75 pips, which is somewhere down there roughly. So if it gets down to there roughly, I will take 1/3 of that position off. So I'm controlling my drawdown. So I'm scaling out of positions that go against me. So I either want this to do that and then that, or if it does that, I will scale out and get back in. So let's look at an example of a trade that worked with 2 positions. Why have I got no trades on here that have worked with 2 positions? Euro New Zealand. There we go. There we go. So there's an example. I haven't got my face on the screen, have I? Sorry. Everyone's been like, where have you gone? I'm here. I've got to turn my camera back on. So let me just zoom in so you can see that. So this is an example of how the drawdown is controlled. Yeah. So push up, RSI extension on the hourly, initial entry, didn't work. Yeah. That is a scale out. That moved 0.75 against, took off 30% of that position. Yeah. So I'm reducing the risk as we go. So I take a small loss to reduce the drawdown. Yeah. Second entry was taken pretty much next candle. Exit was there. So that is a total of $500 profit. That is a total of $130 loss. So 300 and maths, $70 net on that position, which is basically 0.37% gain on a target of 8%. See how long it takes if you're doing proper risk? Takes a while. All right, DAX is hovering at the minute. So if you're long on the 5-minute ORB, you're pretty much a 1-to-1 look. Not particularly fantastic, really stalled out there. Might get a bit more movement at the end of the session, hopefully. Dabas, last year I went from 3K to 20K in 11 months with similar style of yours, but was not sure why I am adding to position and was not constant in adding to your risk, which led me to blow all your profit. There is nothing on the market that I haven't learned from market to volume profile to order flow. Emotions and range trading is killing me. Well, if you position trade, you don't have emotions because the only reason you get cross is by making losses if you position trade. You don't lose. Well, you do lose, but revenge trading is killing you. Yeah, it will do. If you, what I would say about that, Dabas, is if you took an account from 3K to 20K in 11 months, you were massively over leveraged. Yeah, you nearly 10x'd your account. 10x in your account will take you 5 to 10 years. That's gambling, basically, which is good. That was a bloody good run. Well done. It's not many people that can have a run and last that long. So fair play. I couldn't. Compounding is just very, very difficult. Anna, the EA is killing me since yesterday. What's killing you? What, market reverse alerts, EA? Shouldn't be being killed on anything. There's nothing killing. Nothing. Well, I'm not being killed. Maybe you've got different settings. I don't know. Does the dashboard work with the EA, or will you have to purchase the indicators individually? With dashboards, dashboards are nothing to do with the EA. The dashboards are for alerts. Nothing. The EA just trades. The EA executes the strategies. The dashboard alerts you to opportunities. So you use the dashboards to manually trade, to find opportunities to get in. But a lot of people, a lot of people do is they wait for an alert on the dash. Have a look at it. So have a look at EuroCAD on the hourly. And this is what I used to do as well. Do I fancy that? I've missed it already, but if so, yeah, stick the EA on and then the EA will get you in. But up to you whether you use the dashes. I mean, a lot of people trade manually off the dashes, which is fine as well. You don't need the EA. I mean, especially if you're trading H4. If you're trading H4, you're going to get so few alerts during the day. You don't really need the EA because you've got so much time to react. H1, if you can check the charts every hour, and obviously every time you get an alert, react to it, you don't really need to use the EA either because you can do it all manually. But the problem is if you use manual trading, you will be tempted, as Dabas just said, to get in too close, get in with too much lot size, get a bit cross, and maybe take a massive lot size. The EA will just trade exactly as you tell it to trade. That's the advantage of using an EA, is you take yourself out of the equation. There's no human involved, there's no emotions involved, there's no revenge trading happening. If you want a revenge trade, you can do it manually. The EA won't do it for you. So that's the advantage of using the EAs, or using any EA to trade for you, is that you are not involved. Humans self-sabotage. Okay, but after the evaluation. Leverage you are using at the moment, 1 to 500, but you can use any leverage you like, above 100 really. 1 to 100 is enough for virtually everything. Which MRA strategy do you recommend in a funded account? So the H4, if you look at the results for, so this is the H1 hedging set file. This is a new set file. This is still, you know, it's doing amazing, but it's high risk. You're taking a lot of trades, yeah. So H4, this one, H4 M5 or H4 M15, doesn't really matter which time frame you execute on. M5 I kind of prefer at the moment. You can see this has only done 6%, 7% this month. So you're going to get a lot less entries on H4 because the RSI extension on H4 takes a lot longer to get to, and the moves tend to be slower. However, you will get into less risk, you'll get into less drawdown, and you'll get better quality trades. You make less money. So if you want to trade a funded account, this is your slow, steady, pay the bills strategy. This is my core strategy that I've traded for years. H1 is faster. You're going to get a lot more entries. You're going to get a lot more drawdown. You're going to get a lot more potentially aggressive moves. But as you can see, a lot more profit, more dangerous. ADR reversals, very similar to H1, but you'll get less entries. So this is a little bit more of a safe. I mean, this has done 25% this month, but this is an exceptional month. So there's no answer. There's nothing safe. What people are usually wanting is to find the safe strategies. There isn't a safe strategy because a strategy will have a period of loss. So there is nothing safe or better. It's different. H1M5 is different to H4M15, which is different to ADR reversals, which is different to hedging. They're not more dangerous or safer necessarily, because it depends on the market conditions when you start executing the strategies. They're just different. So there's no real right or wrong answer to that one. What do you think about New Zealand dollar CAD? I'm long. Nice RSI extension to the downside. We just had an hourly reversal alert as well. So yeah, I'm long at the minute. But it's just a mess at the minute. There is this downside danger down here, potentially. So we could well be coming back down to here and then back up into there. But I don't know at the moment. But long at the moment. Off that extension, I got in here, obviously. Sorry, there. And then second entry. So just looking for an ADR push. 8 crap. Yep, Jonathan. No, 8 crap. Definitely 8 crap. 8 cap broker. I just call them 8 crap. I just don't like them. Personal choice, but I just don't like the execution. Very, very, very slow in my experience. But it might have changed. I don't know. If anybody wants to do an evaluation with any of these prop firms that use 8 cap, let me know. If it's changed and they've got fast execution, it opens up a lot more doors. However, I still don't think any of them have got any reason to use them over my Forex funds or E8. Unless there's a prop firm that has something that is like, wow, that's a game changer. There's no better price than my Forex funds, and there's no better passing in one day than E8. So there's just no need to use anybody else, but it's personal preference. Other people might say, I want to use FTMO all the time. Fine, use them. No right or wrong. Doesn't matter which one you use. It's just got to meet your criteria. So if you're not an EA trader, then you can use all the ones that say you can't use EAs, no problem. And the ones that say you can use EAs. If you're an EA trader, you can't use the ones that say you can't use an EA. So you have to knock them off the list. There's so many out there. But all I would say is with prop, use the ones that are established. If they've been around for 2, 3, 4+ years, if they've been around for 2 months, why bother? There's ones that have been around for, same with brokers. Brokers that are overseas and been going for 6 months. Why not use the 15-year-old brokers that have been there forever with more capital than you could possibly imagine? Why use the one that's 2 months old? No point. Unless they're offering you something amazing, which they can't, because the only thing a broker can offer you is virtually no spread and tiny commissions. Other than that, they're all the same. Some spread more than others and make it worse than others, but that's basically what it is, isn't it, brokers? Hannah Forex is a good Uber. Other than backtesting, she don't do anything. Showed me one video of her doing live trading. Never heard of that. I don't watch YouTubers much. I do every now and again. I keep track of a few, but I don't get a chance to watch any because I'm in here. You are the best. No, you're the best, Ali. Morning. She has moved to a nice condo, taken trips, and does not come from money, and showed her withdrawing 4 figures. I don't know. Hannah Forex. Never heard of her. $173,000 subscribers. What's up? I'm Hannah, and I'm learning how to trade the Forex markets. Well, she's not a very good mentor, is she? She's learning. Maybe she's learned, which is fine. Don't know. A lot of video views, look. 77,000 views in 2 weeks. How is she doing that? I want to know how you do that. I'd love to get an income from YouTube like she does. Do you know how much she'll probably earn off of that? 77,000, 20, about $200 or $300. Do the maths. She could buy lots of meals with that. It was on 1 to 30 leverage. I don't know. I'm losing. We're so far behind on chat. I don't know why, but it took me. It took only 3 positions from 2022 until now. Oh, you're back testing, Anna. Sorry. Okay. I don't know. Yeah, I don't know. You need to check your settings. Double check your settings and what they're doing. Australia only allow 1 to 30 leverage. Go overseas then. Go overseas. Don't use someone in Australia. I can only get 1 to 30 leverage in the UK. So I use a broker overseas. I get 1 to 500. In fact, I can have 1 to 1,000. In fact, I think they've just done a 1 to 5,000 leverage account. Why would you ever need 1 to 5,000? 1 to 500 is 4 times more than I need. But 1 to 30 is absolutely fine for normal trading. For position trading, 1 to 30 doesn't cut it because you won't have enough margin to get the positions on, and then you're stuffed. If you can't scale in and do drawdown control and do aggressive drawdown control when you need to, you're dead. You've blown it. That's it. You've got to have more than 130. H4, M15 or 5 set file is on MQL5 or in the chat. It's in the Telegram group, but it's also on MQL5 as well. So look, if you go to the product on the marketplace and click, there's links in there to the set files. They're all on there. Funded Trader is really good. Yeah, they're all good. They're all good, but they're not, the Funded Trader is more expensive than my Forex funds. Their rules are not better than my Forex funds. Therefore, why would I use them? They're good. I'm not saying they're bad. It's just they're not the cheapest and the rules aren't as good. There's nothing wrong with their rules. There's nothing wrong with their price. It's just higher than what I pay. No, there's no, it's, unless you can offer me a 50K account for $300 and I can pass it in 5 days with an 8% target, you're not getting my business. Simple as that. The Funded Trader can't offer me anything better than that. So why would I give them my money when I can give it to my Forex funds who I've got history with? I'm all set up on deal. I've got contracts in place. There's just no need to change. Yeah. But if you want to use the Funded Trader, use them. Just stay with them. No right or wrong. Personal preference is everything. Broker's personal preference, the indicators, the EAs you buy, who you watch on YouTube, everything's personal preference in this industry, isn't it? So you pick whatever works for you. Kennelly, is it Forex VPS you recommend for the MT4? Can't find the link on your website. So it's up here in the My Recommendations section. It's these guys here. VPS Forex Trader. That's the VPS company that I use, just because they're set up, their VPSs are optimized for MT4. And also the nice thing about their website is they show you how many MT4s you can run, which is handy. Look. So, you know, this plan, which is $18 a month, you can run 4 MT4s on it. This one, which is 34, you can run 7. And this one, you can run up to 10. But what I would say is if you want to run 4 MT4s, go for that one. Yeah, if you want to run 7 MT4s, go for that one. If you want to run 10 MT4s, buy 2 of those. If you're going to run 10 MT4s, you've got too much money, I guess, or you're doing a lot of testing. So yeah, that for $35 a month, that's the one you want. It's got more power. If you can afford it, go to $47 a month and get that one, because you're over. You can never have too much power on your VPS. You can also have dedicated. So I've got one of these as well. I've got 3 VPSs basically. I've got one of these, which is just, you know, I log in and it's like instant, nothing touches the sides. You can run 5 MT4s with 28 charts on, running super complex EAs, and it just goes, yeah, whatever. I'm using 0.0001% of my CPU. Give me some more to do. So that's what you want. For me, you know, $100 a month is a trade, isn't it? So it's less than a trade. So yeah, just but again, they're the ones I've used. Unger, the real gem, 4 times world trading champion with EAs. Yeah. There's a book called The Unger Method. There you go. There he is. But again, he's just selling you stuff. Yeah. So everybody that's successful is selling you a course, a book, or something. That's absolutely fine. But these guys like Unger are very much like Larry Williams and, you know, those guys. Yeah, these guys are trading multi-million-dollar accounts on the daily time frame. Yeah, you can't replicate the Unger method on M5 or M15 or hourly. It doesn't work. So if you want to pass prop with the Unger method, it's not going to happen. These prop firms have a 30-day max rule in place for a reason, because they know that everybody that makes money in this industry is trading the 4-hour and the daily time frames, or hourly. But hourly, look, hourly's dangerous. Hourly gets you into drawdown. So Unger was a 4 times world trading champion, trading high time frames. Larry Williams, Warren Buffett, everybody trades daily. Everybody that makes money, institutions, it's all daily. There's no 5-minute trading. There's high frequency trading in institutions, but that's a different thing. That's just using arbitrage to make a profit. Get an ICT badge. She's an ICT student. Oh, right, okay. US dollar CAD trying to die. Yep, coming down at the moment. Yeah, very weak US today, apart from the yen. So yen is weaker. Very weak yuan, very weak yen at the moment. Still undoing. You say we're undoing all of these. Basically all we're doing is we're undoing all the safe haven rush. He's all getting undone. Yeah. Bogdan, by improving the SEO of videos. How does she get 60? She doesn't do that. My videos are SEO to death. I ran an SEO agency. I know about SEO. My videos are SEO to death. It's nothing to do with that. The algorithm works in a multitude of ways. Get 60,000 views on a YouTube video. A lot of the time, I'll tell you what I could do. I could go onto Fiverr right now and pay $30 and get 200,000 views on any video I like. They'll all be bots. And I will get banned. But yeah, I don't know. No, that sounds like legitimate. She's obviously got a good following. She's got 170,000 subscribers, you know, so that's how you get views, isn't it? Every time someone puts a video out with 170,000 subscribers, she's got potentially 170,000 views, isn't she? Building up your subscriber base. No one's subscribed today, by the way. I've just realised. I haven't heard any subscribers today. Button. Hit the button. Otherwise, you won't know when I'm on. How did the ORB do today? Yeah, okay-ish. If you took the 5 minute, perfect. 5 minute ORB just went pop, 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 and we're still up there. So yeah, lovely. If you took the pre-market 15, you had one stop out low, and then you pop, 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 you're up there. So the pre-market 15 was awesome. Pre-market 15, the max was 89, your stop was 19. You had one stop out though, so one loss, 9 to 1 ish. No, not that. 4 to 1, 5 to 1. So yeah, good this morning. It's been very ropey over the last few days because we've had very, very choppy opens. Salty finally gets to London. Happy to be here. Thanks for having me. You're in London, are you? Smelly old London. CAD killing you, Les. Yeah, CAD's on a mission at the moment. Tokyo Drip. Good name. I have a live 50k My Forex Funds accounts. Which do you recommend to use? Market reverse alerts or ORB for long term? I've probably covered that, haven't I? The ORB EA has very good results, like today, for example. That's your pre-market 15 opening range break with one stop out on the short and then long stop pop. However, you will get choppy days where you will have to use a max loss. So the ORB EA is a breakout EA. So the edge is long term because it's a breakout. All breakout and trend strategies have a 30% strike rate and are long-term edges. Yeah. All mean reversion strategies have a much higher 60 to 70% strike rate and are very high reward over short periods. Yeah. So, you know, mean reversion will bank a lot more money a lot quicker, but is higher risk. So they're both good. The ORB EA can be very frustrating, I find, because you'll have days where you'll run up 7, 8, 10k. So if you're trading thanks for the follow, welcome aboard, Evans. Keep hitting the subscribe, like buttons and all that malarkey. So yeah, if you've got 50k account, you've got 2.5k drawdown a day. You're going to need to set the max drawdown to 2k really to be realistic. So the problem you're going to find is you'll have a run up of probably 2, 3, 4, 5k, and then you'll have 2 bad days which will wipe out a lot of that profit. So what I would suggest is if you're running a funded account with the opening range breakout EA, you do what I do with it, which is if you get a good start, stop, withdraw, restart. So what I do with my funded accounts is I set a 5% target on them. So on a 100K account, I will set a 5K target. When it's reached, I will stop trading the account completely. Wait 2 weeks, yeah, withdraw the profit, and then restart the account. Because if you go to that 5K, yeah, and then the next trade knocks 2K off of it, you're down to 3K. Fine. Your mentality, your psychology will be constantly going, owes me 2K. I need that 2K back. So you'll let it run again. Then you'll have a minus $500 day. And you'll be down to 2,500s. Now you're livid because you've lost half your profit. You haven't. You've made 2.5K. But your psychology is programmed on a 100K account to be making 8% a fortnight or a week. So this is a minuscule amount of money. What you've got to do with prop when you get to a decent amount of cash is stop trading the account. Start another evaluation. You know you've got $5 coming. Start another one. Start another 3. Just keep yourself occupied for 2 weeks until that payday. Draw that out, then restart that. Yeah. So what I do with the ORB EA when I stick it on a funded account, if day one it runs up 2.5K, yeah, I'll drop risk. Yeah, and then I'll wait for the next day. If the next day is good and it runs up and it has another 1.2K day, i.e. we get a nice opening range breakout that goes into trend, I'll stop. I'll take whatever it is. So two days on the trot or 2 sessions on the trot. Don't forget, you've got Frankfurt is one ORB, NASDAQ, New York, or Dow, whatever you're trading with it, is the second one. So if you have a good Frankfurt, nice big ORB, and then New York, you get a nice big ORB, stop. Yeah, day one, done, walk away. Shut that down. Do not go back into that account. Turn the EA off. Because the chances are your P&L, you know, the opening range breakout EA. Look at the strategy results. So it depends which strategy you're using, but so look at the profit curves. Yeah, you have stagnation periods, you have run-up periods, you have flags, push, flag, push. Yeah, it's a long-term edge and it will play out beautifully. But some of these set files are not suitable for prop. This one not suitable for prop because it's just going to have this makes lots of money, but it has a very low strike rate. But you know, a lot of them are very big run-ups. So you know, it's the same thing as I said earlier. If you start the evaluation on that day, if you start your funded account that day and it does that, brilliant. Take the money, run, because there's a possibility that the next 5 days are going to do that, which is going to make you cross. And then you're going to go, oh, screw it, I'm going to take a manual scalp with 1% to try and get that money back. Yeah. So that's what I would do with it. And that's what I do with it. So you just got to, you know, look at this stagnation period here. So lovely big run up, stagnation, run up, stagnation, run up, stagnation. Yeah. So if you start the EA there on an evaluation, it will never pass. It's totally down to the market. There's nothing you can do to make something work or not work. The market makes an entry profitable or unprofitable. The opening range breakout will either work or it won't. There's a strike rate, and that strike rate is never going to be controllable. So when you have the money, you take the money. As I say, it's a business. If you do 10 evaluations at $500 each on a 100K account, so you do $100 million worth of funding, yeah, you've spent $5 grand. Yeah. So that's what you got to get back. If you make that back in 2 ORBs, pull it out, because you've got to have capital to stay in the game, haven't you? At the end You have to make life of a trader video to get videos. Yeah, no, to get views. Life of a trader. I'm in here every day. What more life of a trader do you want, right? I stream for 6 hours a day live trading. That's the life of a trader. Sitting in here with you lot. I get up, I go spinning. Yeah, I trade all day. I have a break after this session and then I come back for the New York session. In between that, I do back testing and strategy development. I do the afternoon session. I cut that off because I've got to go spinning, which I do in the evenings. And then I come home, I eat my dinner, spend time with the wife and the kids, and I go to sleep. I wake up, I go spinning. Rinse, repeat. That's the life of a trader. It's what everybody else does. I go to work, I go exercise, I spend time with the family, I go to work. I could hold the camera up and go, this is my office. Is anybody going to subscribe more if I do that? I could give you a tour of the house, go and show you the Beamer on the drive if you want, and the Porsche. It's not going to get me more subscribers, is it? I don't know. I don't really want lots of subscribers anyway, because then I'd never get out of here, because if more people ask questions, I never stop talking. Sam, Hannah has hardly any views until she decided to focus on ICT games. Buzzword. She just attracted the ICT followers who want more simplistic approach to ICT. So why am I not approaching? Why are people not attracted to me? Is it? It's because I'm a man and I'm not good looking. That's what it is. I can't simplify the market any more than this, can I? None of those people are trading live on stream twice a day, showing P&Ls, showing every trade, good, bad, ugly. Oh my God, I just made a loss on that trade. No one's showing all this stuff, are they? Why don't people want to subscribe to my channel? I show how it is. That's why, isn't it? I show how it is. This is real trading, not concepts and methods and theory. You know, people want theory or a Lamborghini. I haven't got one of them either. How did we get to the bottom of the BRIC Nations currency question? No idea. Don't know what that is. So I don't know what impact that's going to have, because I don't know what it is, so I can't help with that one. Try to add more text with keywords. I do. All my videos have got very big descriptions in them. Many words. Many words. Look. There are many words in my videos. Many words. I don't know. I'm really, honestly, I'm not that interested in it. Not that interested in it. Sam Shah, my alarm did go when Hannah switched to ICT. Why change methods? If it's not broke, don't fix it, because she's just teaching theory. Warren Buffett trades the daily. He certainly does. Yeah, show the cars. That'll do it. People like to dream. I know. But this is my whole purpose of my channel and me, is I don't sell the dream. I sell the reality. And I put the work in. That's the difference. People don't want it, do they? Which is fine, I don't care. I'm not here to make money out of YouTube. People like the dream. Yeah. So, what's your plan with the pound New Zealand? Well, still in it at the moment. We've got 1.36 DD on that at the minute. So it's just waiting basically for it to come down and fill this propulsion gap, potentially come back down here. So I'm just waiting for some weakness on the pound, really, which is starting to. We've had a reversal out on the hourly yesterday. So if you look at the market structure since we had this big drop, the market structure is very, well, I made a bit of a chop there, but very orderly at the minute. So I'm waiting for the structure break, the downside. As soon as that structure break to the downside comes on, the sellers will all jump on board, we'll push back up, and we'll be down back into this propulsion gap. So this is where we're coming. It's just taking its sweet time to get there at the minute. So, but it can, 2 weeks, 3 weeks sometimes. If an instrument wants to be slow and sideways, it'll be slow and sideways. Like I say, nothing's in our control. Yeah, we have to just wait. We know where it's going. We just have to wait for it to get there. It just takes a long time. So nothing. I haven't got any plans on it at the moment. It's not in enough drawdown for me to worry about it. These streams are perfection. Although I do talk too much. Don't matter. Reality wins in the long end. Yeah. I'm pre-YouTube generation, so I didn't have the 125 weekly range on the CAD yen's just been hit. Still pushing on the CAD. So we're almost back to origin, return to source. So this is the source of the yen intervention, or rather the safe haven move. So when we get back to there, we may well find some sellers start to kick in, although we have got this up at 125 today. But yeah, I was part of I started trading in 2008. So I wasn't quite on dial-up modems, but MT4 was just coming out. I started in stocks because the FX markets weren't very traded. Everyone was trading stocks, so I started there, and it was pre-YouTube. YouTube was very much in its infancy, if it was even around then. Don't think it was, and if it was not really. Yeah, there wasn't much content out there. So everything that I had to learn by was books, PDFs, and paid courses. So when you came across a website with a paid course on it, you bought it because you hadn't done that. So then you did one on candlesticks, you did one on market structure, you did one on this, you did one on that, you did one on the other. And then all of a sudden, YouTube started to get, oh, hang on, we can learn stuff for free on here. And you started then watching people's YouTube who were selling you the courses. So they were preempting you on their YouTube videos to sell you another course. You did that course and you think, hang on a minute, I've done this. So what you end up doing then is everybody replicates the same thing on YouTube, and all you do is you get the same information in a different way. ICT, for example, everything he does is based on Larry Williams and other people's strategies and methodologies, which is nothing wrong with that at all. It's just he's repackaged everything and called it something different to make it easier to understand. And then everybody, like that lady, takes his concepts and does them again and does them again. And all you end up doing is paying money for the same thing over and over and over again. And you end up at the end of the day realizing that there's nothing works. Everything you learn in this industry is rubbish, because this thing will go up if it wants to, and it will go down if it wants to. And there's not one strategy on the planet that can tell you whether that's going up or down today. There's no technical analysis. There's no pattern. There's nothing. It's random. If the banks have to execute 25 million Canadian dollars long on the yen today because they need to do an exchange rate for a Canadian oil company, that's what they'll do. This will go up. If you draw a line here that says that's where it's going to bounce, it'll do what the hell it likes. If it gets here and it's only executed $5 million of it, it's going to go like that. And you go, yeah, look, it bounced. Well, of course it did, because there's a load of limit orders sitting there by all the other idiots that think technical analysis works. All the books will teach you how to do this. Actually, no, they don't now. They don't teach it anymore, do they? They call it now supply and demand. Let's call it something else. Repackage it, sell it again. Repackage it, sell it again. Support and resistance. It's been around forever. Let's change the Japanese candlestick and put a wider body on it and different tails and call it Heikinashi. Quick, sell a course on it. Do you think the banks have got a blind bit of notice as to whether you're trading Heikinashi support resistance, ICT concepts, BTMM concepts, whether you're using a footprint chart, a candlestick chart, a line chart? Nothing. Doesn't make any difference. Markets go up, markets go down. They move through time. Your job is to take a position on it, wait for it to come into profit, and then take it off. Simple as that. There's no strategy. There's nothing that works. And as soon as people realize that, they start making money. Yeah. I have an entry criteria to get into a trade. And yes, you can call it a strategy, but I have absolutely no faith in any button press I take. I've eliminated psychology because all psychology does is ruin a trader. If you eliminate psychology, you become profitable. But you can't eliminate psychology because you're a human being, and that's what we evolve on. That's what we use in our everyday life. Everything we do, we meet someone for the first time. Our brain is psychologically going, how should I react to you? You ever been into actually not into a car dealership, but if you go into a car dealership and you walk in and you're your normal you, yeah, and the car dealer's like, hey, how's it going? You suddenly go, brilliant, thanks. And you become happy man. Why'd you do that? Because your psychology is saying, mimic this guy. He's happy. I'm going to be happy. Yeah, you have no control over it. This thing, if you have psychology, will destroy you. Go and buy 1,000 strategies. Doesn't matter. They'll all get destroyed by you, not by that. Yeah. So position trading removes the psychology. Why the banks trade this way is because they also have no control over this. There's 10 major banks and organizations that have enough volume in this market to move it up and down. They're all fighting each other. Barclays, when they pump long, if HSBC are pumping short by a higher amount, Barclays are going to lose. But they know that they can wind it back up again to make money. So when it goes up, it comes back down again. Then it goes down, then it goes up again. This is what we call market structure. But the banks don't use a stop loss and put orders in the market to get you destroyed. All other strategies you will find out there do. That's why no one else has P&Ls that look like that, because they can't show this on the screen because they can't do it. That's what I've learned in 15 years of trading. There is no strategy out there that I could make profitable. So I stopped trying. And the only way you can do that is by not using a stop loss and reducing your risk down to an amount that becomes insignificant. I've got 24 positions on, 24 individual trades on right now on this account, and I'm in 4% of drawdown. Everybody else in the world right now would have taken 4 trades to lose that amount, and I haven't even lost it. That's just unrealized profit as far as I'm concerned at the minute. Yeah. Psychology, shift, that's the way you do it. And that's what the bootcamp's all about. You can't have a strategy that works with a stop consistently and make money from it, because you as the trader, when that series of 6 or 7 losing trades comes in, you will not be able to get over that. Yeah, the strategy will be fine. The strategy will recover from that loss, but you won't execute the trades because you'll be too scared after that losing run to get back in. Yeah, so you eliminate the losses. All of a sudden the P&L curve flips in the other direction because your psychology no longer has a worry about taking the next trade. You just take the next trade. And if you use an EA like the Market Reverse Alerts EA, obviously it does it all for you. So you don't even have to think about it. Shift. But this is how it works. And I'm in a bit of a privileged position to have been trading for such a long time that I've seen this evolve. Take this concept, change it, repeat it, repeat it, repeat it, repackage it. Start in a white box, make it a red box, sell the red box. Now change the red box to a blue box, sell it. Change it to a black box, change it to this box. Put the word AI on top of it, repackage it. Put the word neural net on top of it, repackage it. Take those 3 indicators, hide them from everybody, draw an arrow, repackage it. Sell it over and over and over again. The people making the money are the people selling everything. Yeah, that's how it works, isn't it? But it's just when you come into this industry, as I did, I've spent thousands, tens of thousands on courses, learning the same stuff that is all out there for absolute free on YouTube. It's just that the course packages it in a way that you can understand it. But if you do that course and it doesn't click, you throw it away and you go and buy another one. And what you're looking for is the course that clicks with you. What you realize after a while is there isn't one. You've got to make your own. What you're seeing on the screen here is an amalgamation of ICT, BTMM, my own stuff, a guy that taught me to position trade, a guy that taught me how the market works, and a guy that made a WRB indicator 15 years ago. Lots of stuff. But none of the people that taught me this came up with those concepts themselves. They're just stuff that they've been learned. Yeah, and I picked it up from them. You're picking it up from me, and you're going to go off and probably do the same thing in the future. Yeah, that's what this industry does. So you have to stop at some point and go, right, enough. I'm going to press that button and I'm going to see what happens and see for yourself what happens. And this is why I say in the bootcamp, on the very first video, within the first 20 minutes, give it 30 days. Do this for 30 days. And if you don't come back with 5% profit in your account, but no one does come back with less than 5%, because it's impossible to press the button and be wrong that many times that you can't make a profit on your account. Because the only thing that is different between me and everybody in the world is everybody in the world puts an order in the market to make them lose money. The banks don't do this. The institutions don't do this. The hedge funds don't do this. Why are you doing it? Stop doing it and you become one of these guys. What do these guys do? Drive Ferraris. But everybody that drives a Ferrari on YouTube and sells a course is using the thing that stops them owning that Ferrari. Everyone can rent a Ferrari. I can rent one tomorrow and go and stand on my drive and take a picture. Is that going to make you subscribe to my channel? Maybe. I don't know. You know? Anyway, there you go. I'll clip that bit. That's a good one to put out there. No, I won't. You know, it's just that's life, isn't it? That is the never-ending cycle people are in. Bogdan, CE strategy for Daniel. I don't know what that means. You're talking a funny language now. Hang on a minute. You weren't talking a funny language the other day. You've suddenly changed nationality. What about the Easter weeks from your experience? Quiet due to vacations? I don't pay attention to seasonality. I don't pay attention to seasonality. So yeah, maybe they are quieter. Summer trading is definitely quieter. Installed the demo of the market reversal alerts, but I can't get it to work in the strategy tester. The options dialog box offers no OK button. Only cancel and reset. Something wrong with your MT4 whipping post. You've got an issue with your terminal there, I think. Fisi, you are right. If they want to move a currency pair up and down, it doesn't matter if the whole world is selling. It will go up. Yeah. This is a really old, crappy video that I did years ago. It's only 9 minutes long, but it's one of the most important videos I think on my website. Yeah. These three. I must do a new. I must actually re-record these. But I say these in here every day. That video leads on to that video. So this, why your system hopping is basically directly related to that, and the fact that you don't understand what that is. And this one here, it's the unconscious bit of us as a trader. This, you are not in control. Human beings have a desire to control everything. We have to. If we don't control everything in our life spirals out of control. If we don't control our children, they go off and do stupid things. If we don't control our car, we crash. If we don't control our finances, we go bankrupt. If we don't control everything, we can't survive as human beings. Having to accept the fact that you are trying to do a job that you have no control over, like a brain surgeon, he is in control of his instruments. A pilot is in control of the plane. A racing car driver is in control of a fast moving lump of metal. Yeah. You are not in control of the thing that you're trying to control. And you can't let that go. This is the psychology bit that is not fixable. And as soon as you realize that you're not in control, you then have two options. You either give this job up or you give up the thing that stops you losing money. There is only two things you can do: give up or stop doing that. Everything else in between will fail. You can't do it. Everyone can have a lucky streak. Yeah, I'm a pretty good scalper some days. Some days I'm crap. I can scalp an account. I could double an account, no problem, within days. But I can't do that for the rest of my life because the market will not let me. Because the market will only give me conditions that are right for my scalping skills for a period of time. Because I can't control it. If I could control it, I'd be a millionaire. I'm not. The people that make the most money, like Warren Buffett, don't care about control because they have so much money they can put into the market. It doesn't matter which direction it goes. Eventually, it will come back in the right way. And if they press the close button with a $1 gain, they win. Can you stand the market going against you for long enough to survive? That is the job. You've got to have some kind of mechanism to get you in, but at the end of the day, there's nothing you can do about this thing. It just goes where it wants. I'm unable to save EA settings. File name come up .set. I don't know. That's you're unable to save EA settings. So you just basically hit save. Yeah, and it comes up with .set. You just name it, yeah, whatever you want. That's normal, unless I'm misunderstanding. Oh yeah, just type in the file name and hit save. ICT himself moved away from Forex and went to futures. Now in futures, also ICT concepts are not working. Are they? Is he moved to futures, is he? Interesting. See, this is my point. You know, if it worked, why would you move, or why would you stop doing it and move away? I'm a programmer by trade. Yeah, I did a college course programming. I did IT when BBC Micros and computers had green screens, and my brain is logical. I am a logical guy. When the wife says, "Can we go on holiday to wherever this year?" my first thing that goes through my brain is like, I'm doing calculations in there and I'm figuring out. So if I did that, if this is where yeah, can we do it? Yes, we can. Logically, yeah, it makes sense. Everything I do, every step I take in this world is based on logic and fact, and that's just me as a human being. It's completely illogical if you have something that is making you consistent money to change. Yes, you can always try and strive to make it better, but you don't remove that. You make it better, you test, and if it doesn't work, you scrap. And you keep repeating that test until something becomes better. And then you switch. At the moment, I'm using the 14 RSI instead of the 21 because the market's contracted. I've switched. When the market expands and we go into a more volatile market in FX, I will switch back to the 21 RSI. Yeah, I adapt. Why would you scrap something that you've put 5 years or 10 years or whatever of your life into and move into a different marketplace you know nothing about? Unless you want to make money out of it in some way, shape or form that isn't related to actually doing the thing. I don't know. Doesn't make sense, does it? Why would you move into futures? It's a totally different market, totally different market, totally different movement, totally different way of money, totally different risk parameters. Yeah, don't know. You are so much brilliant. Can't imagine a better teacher. The guy that made me break even dragged me kicking and screaming from the 5-minute chart up to the 4-hour chart. And that's how I became break even. And I think in my journey, that was my light bulb moment. He told me never to trade below the 4 hour chart. And I ignored him, and I tried to execute all of his strategies on lower time frames, and with a little bit of success, but with a lot of failure along the way as well, and never a profit curve that looked like that. He dragged me kicking and screaming up to the 4 hour chart, and all of a sudden everything slowed down and everything started to work. And he said, this is where everybody in the banks starts to analyze, and then they go up from there. Yeah, and that stuck with me, which is why, you know, when you see the moving averages on my chart, that's the wrong one, that's the 5 minute. Yeah, this is the 4 hour chart. This is the God, as far as I'm concerned, of trading. This is where everything is flattened out to the point that makes sense. These moving averages from the daily are the ones that the market follows. Yeah, it's smooth, it's clear, it's easy to read, it's fully understandable. Yet everybody wants to go down to these small time frames. You know, when I see ICT, I didn't realize until recently he's doing these live streams and stuff. You know, you see him trading 1 minute charts and stuff. You're like, you're just trading algorithmic chop. Doesn't work. Everyone can be lucky. You know, but you're never going to be able to be consistent there, which is why the H4 M15 strategy for mean reversion is the one that I focus on in the live rooms and focus on in the course in the bootcamp, and the one that is my bread and butter, because this is the time frame that slows everything down just enough for you to actually understand it and make sense and make money. H1 is kind of the very bare minimum I would ever look at. And even then you're like, it's a little bit jittery, isn't it? Look at the stuff. I mean, on H1, I mean, it's just jittery. It's worrying. Not worrying, but it's like, you know, this will get up to 10, 15% sometimes because I'm on H1. H4, you'll find it very difficult to get anywhere near that because you just won't get enough volume on, because the market won't allow you to get into that enough positions because it's safe and it works better. But that's what, you know, the person that got me over the line from a losing trader to a break-even trader, you know, it's when you say you can't imagine a better teacher. He was my mentor, if you like, that got me like, well, it's light bulbs. It's all about light bulbs. You just got to get the light bulbs. You've got to find the light bulbs that turn your brain on. Everybody's got different flicks of switches that they need to get them over the line in this industry. Very difficult to find out what they are until you've tried everything. Yeah, you see, and I say ICT stuff is brilliant. Go and do it. Very, very good. For me, he wasn't a very good teacher when I tried to do his stuff because it sent me to sleep a little bit. It's a bit too overcomplicated for me. And I didn't finish it all because I just got to the point where I was like, I just don't get it anymore. But one thing that stuck with me was market structure. And market structure was taught to me by somebody way before ICT. And I was like, he's talking about that as well. So I paid more attention to it because it's important. H1 for H1 hedge, do you have to open all pairs charts and add the EA on it? So basically one MT4 with 28 charts. Yeah. So yeah, every see all the charts open at the bottom. Yeah. So yeah, all the charts. Dirk, but you managed to make wins in lower time frames too. Yeah, I do. Everyone, think about it, right? Heads long. Right, go and find an FX pair. Open up the first one that comes to your mind. Go down to the 5 minute chart and press the buy button. What's your odds? Yeah. Everyone can make wins on lower time frames. If you go to the 5 minute time frame right now on pound US dollar and press the buy button, there's a 50% chance that within the next 5 to 10 candles, you'll be able to close that in a profit. Everyone can make wins on lower time frames. Of course you can. This is a 50-50 game. The market does two things. It goes up and it goes down. And it does that moving through time. There is only two outcomes to a button press: profit or loss, excluding 1 minute chart where you might get spreaded out and it can move your way and you can still be negative. But you know, get rid of the stupid time frames. Everyone can be profitable on the lower time frames. Like I say, I've passed evaluation on EA. I passed an EA evaluation. Yeah, I passed stage 1 in the morning, trading the DAX. By lunchtime, I went straight into stage 2 in the afternoon because there's no time frames on EA, and I traded the Nasdaq. Yeah, and I passed it by 4 o'clock. By 5 o'clock that evening, I had a funded account. Yeah, I posted it all in the Telegram group, and I showed it all. And it was basically trading M5. Brilliant day. Could I repeat that every day of the year? Absolutely not. I couldn't repeat that 50% of the year, 20% of the year. Impossible. Every time I hit that button, price went up, pulled back, and I put a pending order above the high. It pushed up, pulled back, I put a pending order above the high. Pushed up, pulled back, I put a pending order above the high. Guess what happened? That was 8%. I closed it and I went, next please. In the afternoon, I did the opposite on the Nasdaq because it had pushed really hard. So I thought, well, it's pushed really hard today. It's probably going to come down. It came down. I shorted it. It pulled back. I put a pending. Yeah. You've only got to do that 4 times with 1% risk. Yeah. On your 5th leg down, you'll have hit 8 to 10%. Done. What's that? Pure and utter luck. 2 things. First, I picked the right direction, 50-50 shot. Second, we had a trend day, not a rotation range day. Luck. 50-50 shot. It's either going to be a trend day or a rotation day. It's either going to go up or it's going to go down. There's 2 50-50s, yeah, playing out every day on the 5-minute chart on the indices. Those 2 things. If you can pick the direction right on a trend day, you will pass. It's just pure luck, isn't it? Everyone can do that. Yeah. And if I went onto a live stream this afternoon and I did a load of marketing and I spent $2,000 on marketing in 24 hours and I marketed to everybody in the trade who's got an interest in trading on Facebook or YouTube, and I sent them to my stream and I got 50,000 people in my live stream and I showed them that happening on the day live, making 8 grand and going, this is really easy. For $9.99, I will show you and sell you a course that will show you how to do this. And I would sell lots and lots of courses, wouldn't I, to those 50,000 people that saw me execute this live. And do you know what my course would say? Here's a coin, right? At 1:30 or 2:30 every day in the UK, in New York, flip it. If it's a tail, hit the short button. And every time it pushes down, take a breakout. There you go. End of video. Yeah, a 30-second video. That is basically what I would charge $1,000 for, because that's all I did. I had no skill involved in it whatsoever. I know what a trend is and I know how to enter a trend. You can learn all of that on YouTube. You can learn all that in the bootcamp. Yeah, I'm not clever. I'm lucky on low time frames. Very lucky. It's truth though. This is why I've got 91 people in here. Because I tell the truth and nobody's interested in the truth. This is, you know. But you managed to take, make wings or later, yeah. But the stretch theory gives you an edge, yeah. So elastic band theory, again, not mine. Taught to me by a guy on Forex Factory, elastic band theory. Yeah, that's a short right now because it's extended. The banks are going to profit take on this move. So their profit take move will be what? A pullback in a trend or a reversal. I don't know which, I don't know when. What I do know is that the banks cannot sustain that without taking profit. Elastic band theory. I'm not trading anything clever. I'm just doing what the banks do every day, which is move opposite direction to their previous move. Look at it. It's here, right in front of you. This is a brilliant example of exactly how I passed EA. Yeah. I entered short there. Yeah. So I entered short there, went down, it pulled back, I entered short, it went down, pulled back, I entered short, went down, pulled back, I entered short, profit. It's a trend. Continuation. Yeah. Every time the banks push down, they need to take profit. Every time they push up, they need to take profit. Every time they push down, they take profit. They push up, they take profit. They push down, they take profit. This is what market structure is. The banks at the moment are long. They need to take profit. Where's it going? Down. Keep your moving average, keep your average price within an ADR. You will get out when the banks do it. When are the banks going to do it? I don't know. Phone the banks up and say, oi, when are you shorting? You can't, can you? Because it's out of your control, which brings me back to what we were talking about earlier. It's just the way it works. This wisdom is absolute gold. Can't get this truth anywhere else. You can't, can you? You can't get this truth anywhere else. Because it doesn't... I'm not making any money out of it. This is why you can't get this truth anywhere else. If I was selling this for $2,000, or if I was putting the words secret bank system above my website, what's the... It's the same as Larry Williams's book. I've shown Larry Williams's book in here, haven't I, before? It's like the secret bank system I could sell. And the secret bank system is, the answer to it is, there is no secret bank system. Thank you, ka-ching. Right? Larry Williams' book, Long-Term Secrets to Short-Term Trading. The secret of the book is, there is no long-term secret to short-term trading. Don't do it. It doesn't work. So his book title is saying he's got the long-term secret to trading short-term timeframes. What the book is actually about is the fact that you can't do that. So my secret bank strategy is, there isn't one. Simple, isn't it? The truth. Can you recommend brokers that I can use the EA on? All brokers. There's no brokers that don't allow EAs as far as I'm aware. I don't know, but I don't think there are. You'll have to excuse my attire today. As I say, I've just come back from the gym, so I'm scruffy. Right, I'm going to leave it there because I've got to go and have a shower and get ready for the afternoon session. So it's 11 o'clock. I'll be back at 2:20 for New York. We will trade the NASDAQ. The DAX looks like it's completely run out of steam. So the opening range breakout on the DAX was there. That's all you got, really. So break even it. This propulsion gap will either hold and we will run up to that resistance and ADR, or we won't and we'll come down and we'll get that gap fill done and the gap fill from yesterday. So we'll see what happens in New York. The US indices this morning are basically up in the same way as the DAX is. They all do the same thing most of the time. So we're having a run up at the moment. We'll have a look at support and resistance levels when I come on this afternoon, but it's all pretty much the same stuff. There's no gaps to be filled though on the US index. Oh yes, there is. Yeah, we got a gap fill from yesterday on the Dow as well. And look at all these propulsions down here. So there's definitely downside potential today. We'll see you later. So have a good morning, what's left of it. If you need anything, I'll be in the Telegram group. Otherwise, I'll be back tomorrow at 7:50, same time. And I'll be here for this afternoon for 2:20 for the New York session. Have a good one. Hope it's profitable. And I will see you guys later.